Good morning, audience. So, in the last class, we were trying to discuss about Pgbp deductions, where I remember we discussed about 35, 35 AD, and then we moved to the items where you can claim expenditures over the life of the asset. Over the life of the asset, we discussed about 3 items. One is called as license fee, one is called as spectrum fees, and the last item is zero coupon bonds. Yes. In today's discussion, what we're going to do is we're going to look at those kind of expenses which are allowed over 5 years. Where income tax is coming and telling you have a certain expense, you can claim the expense. The only problem is it's a little huge expense for you to claim in 1 year, so might as well do it over 5 years. That's what the logic is. Yes, we're looking at the first expense. The first expense is called as preliminary expenses. What expenses? Preliminary expenses. Income tax is coming and saying that in case you're planning to start a company right now, or you already have a company but you want to extend that company, increase in business, increase in other entity, all those things and all, you will incur some huge cost in the first place called as preliminary expenses, because these expenses are going to be incurred before you start the business. Normally these expenses will be capitalized. Yes or no? Normally these expenses will be capitalized because the business is not started, the operations are not done. Income tax says that whatever capital expense you put off, you can allow it over 5 years. We are going a little different from accounts right now, because in accounts, intangible assets come and say that even if you have preliminary expenses, you have to write it off in the first year itself. Income tax comes and says, no, don't write off in the first year. It will be a huge expense. You do it over next 5 years. This is what the logic is. Yes. What is the simple logic? Preliminary expenses allowed over 5 years. Starting from the year of incorporation. It can be incorporation of the new company itself, or it can be incorporation of the new business, whatever it is. Yes. Now, Rahul, what are the kind of expenses you're talking about? I'm talking about simple expenses like feasibility reports, any kind of conducting market searches, any kind of engineering services, legal charges, drafting MOAs, AOAs, any kind of fees for underwriting, any kind of fees for registering the companies, any kind of other expenses and all those things. These expenses will be allowed over 5 years. This is what the logic is. Yes, but income tax also comes and says that, boss, just because I'm telling that you can claim all expenses over 5 years, don't come and book too much expenses also. It's like you have incorporated the company for 100 crores, but you're claiming expense of 200 crores. Does it make sense? No. Okay, there should be certain limits. So income tax comes and says, at best, I will allow you 5% of the cost of the project. 5% of what? Cost of the project, which means imagine if you're planning to incorporate the company for 100 crores, 5% of that 5 crores is what I can allow you. Anything going beyond 5 crores, ignore it off. I'm sorry, you have paid too much expense. So I can allow you 5 crores over 5 years, which means 1 crore per year. That's an example. This is what the logic is. Yes. But when it comes to companies, income tax comes and says, no, it is not just 5% of the cost of the project. It is 5% of the cost of the project, or 5% of the capital employed, whichever is higher. Yes, so I'm coming and saying it is not just 5% of the cost of the project, it is 5% of the cost of the project, or 5% of capital employed, whichever is higher. That will be compared with the actual cost, whichever is lower. Yes, this is what the simple logic is. What is the simple logic? You're talking about your expenses. Expenses can be maximum of 5% of the cost of the project. But in case you are in a company, it is 5% of the cost of the project, or 5% of the capital employed, whichever is higher. This expense will be allowed over 5 years. Yes. Now, Rahul, what do you mean by cost of the project? Cost of the project simple means whatever is the money you spent on buying assets. That's what the logic is. Any kind of money which is spent by you for buying assets will be called as cost of the project. Now, what do you mean by capital employed? If you remember your FM accounts and all those things, capital employed basically means your shareholder funds along with long-term debts. In simple words, it will be share capital plus debts. Generally, capital employed will be share capital plus reserve and surplus plus debt. But understand, you are just now incorporating the company. Will you have a reserve and surplus? No, you will not have a reserve and surplus. So you will only have share capital and debt. Now the question which then came is, Rahul, what happened? No, I am planning to issue my shares at premium. And so I will also receive something called as securities premium. So technically, reserve and surplus, there is one item called as securities premium. Should you consider that also? that also. The question which then came up is, for the purpose of capital employed, should securities premium also be considered for the purpose of computation? There was a case law called as Berger-Pins. There was a case law called as Berger-Pins. In that case law, the Supreme Court decided that securities premium should not form part of capital employed. Should not form part of capital employed. So when you are doing capital employed is simply share capital plus long-term debts. Share capital plus long-term debts. It will not include any kind of securities premium. It will not include any kind of securities premium. Yes or no? Keep this in mind. Keep this in mind. We are looking at any kind of preliminary expenses. Any preliminary expenses will be allowed over 5 years, subject to a maximum of 5% of the cost of the project or 5% of capital employed, whichever is higher. Whichever is higher. When you talk about cost of the project means any kind of fixed assets which you have incurred. Any kind of capital employed means your securities, share capital plus long-term debts. Share capital plus long-term debts, ignoring any kind of securities premium. Yes, yes, simple section, nothing complicated. Can we go forward? Yes, going forward. Next item is called as amalgamation or demerger. Amalgamation of demerger. Now, you have one company, you are planning to merge it along with another company. You are planning to merge it along with another company. There is Vodafone, there is Idea, both became V. Both became V. Rahul, this merger happened for free of cost? Did this merger happen for free of cost? No, obviously not. You would have incurred some expenses for registration of merger. You would have incurred some expenses for legal drafting. You would have also incurred expenses for any kind of market study, doing that valuation report and all those things. Huge expenses would have been incurred. Income tax is coming and saying, if you are planning to incur any kind of expenses for your amalgamation or demerger, expenses will be huge. Expenses will be huge. It will be similar to preliminary expenses. It will be similar to preliminary expenses. So therefore, whatever expenses which you incur can be claimed over the next 5 years. Can be claimed for the next 5 years. Now understand, who will claim this expense, Rahul? The new company will claim it. The new company will claim it. In case of an amalgamation, it will be the amalgamated company. It will be the amalgamated company. In case of demerger, it will be the resulting company. It will be the resulting company. The company which is newly getting incorporated or newly being formed is called as the new company. That company will claim the expense. That company will claim the expense. Rahul, I have A, I have B. B has bought A. B has bought A. In that case, who will claim? B will claim. B will claim, because B is the new company now. A has shut down. A has shut down, so B will claim the expense. That is what the logic is. Yes or no? Simple provision. Any kind of amalgamation and demerger, you will incur expenses. Expenses will be allowed over 5 years. Expense will be allowed over 5 years. Can we go forward? Next expense is called as your VRS scheme. What scheme? VRS. Abhina, voluntary retirement scheme. If you have devised a strategy where you want to give money to your employees for retiring early, whatever expenses you book, you cannot claim it in one single year, because understand, it is for many employees and it's a big scheme. It is a big scheme. So whatever expenses you incur, please allow it over 5 years. Please allow it over 5 years. That is what the logic is. So any kind of voluntary retirement scheme expenses will be allowed over 5 years. Yes, yes. And the last item is called as family planning expenses. Last item is called as family planning expenses. Income tax is saying that if you are a company, what are you? Company. If you are a company who is going to incur any expenses for family planning. What do you mean by family planning, Rahul? You are a company promoting family planning in your employees. Promoting family planning in your employees. Abhina, Yapti, Rahul. Basically, cases like you are establishing a maternity ward. Okay, or you're promoting employment, you're promoting family planning, coming and saying, you should plan your child like this. This is the best time to plan a child. This is how you should do it. For labor, you should do this much. For maternity, you should do this much. You should take leaves for this much period. You should eat like this. You should eat like that. Doing campaigns, teaching them how to breastfeed, teaching them how to, take care of the baby, all those things. So if you are planning any kind of expenses of those family planning nature, only if it is a company, you will claim the expense over 5 years. You will claim the expense over 5 years. Rahul, why is it being restricted only to company? Why is it being restricted only to company? What is the problem with other people? Imagine an individual incurring expenses for family planning. Whose family is it? His own family. So is it personal or business? Personal expense. Yes. Therefore, it is not allowed. So they're coming and saying, in case you are incurring any kind of family planning expenses, it will be allowed as a deduction only for a company over the next 5 years. Over the next 5 years. Yes or no? Yes or no? Yes, the summary is there on the bottom. Summary is there on the bottom, page number 54. Page number 54, it simply comes and says, when you are planning to incur any kind of expenses in the nature of preliminary expenses, amalgamation, demerger, voluntary retirement expenses, family planning expenses, you will be allowed it over 5 years. You will be allowed it over 5 years. But understand, amalgamation, demerger can only happen for a company, so it is only applicable for company. Family planning can only be eligible for companies, so it is only eligible for companies. Balance everything is available for every person. Balance everything else is available for every person. Yes or no? Yes or no? This is what the logic is. Clear? Yes. The last expense, while it is there in the book, it is not very relevant from exam perspective. I'm just going to read it out, so read it along with me. Okay. The expenses come and say, if you are an Indian company or any other non-resident or any other resident non-corporate associate engaged in prospecting, extracting, production of any minerals, for these expenditures which you incur in the year of commercial production or during the last 4 years before the commencement of production, whatever expenses you incur will be allowed over a period of 10 years from the start of the business. Any unabsorbed expenditure can be carried forward and allowed in the next year. Yes, in simple words, they are coming and saying, if you are into extraction of minerals, whatever expenses you incur will be allowed over 10 years. Now these are very specific industries. So adanala these kind of example questions does not come for exam. You don't have to worry about it. This along with one more expense will come in the last. At the end of the chapter, we'll find the same kind of business, mariner business, ange or expense irkom. Okay, so we'll talk about both together. Right now, not relevant. From exam perspective, you need to know these two charts. Expenditure which are allowed over the life of the asset are spectrum, license, zero coupon bonds. Spectrum and license will be allowed in year format. Zero coupon bonds will be allowed in month format. If you have any kind of expenses of preliminary, amalgamation, BRS and family planning, this will be allowed over 5 years. Along with that one chart which we prepared for expenses which are 100% allowed. What and all we discussed? Scientific research, agricultural extension, skill development, then specified business. 4 expenses we discussed. Yes, so those 4 expenses are allowed over 100%. That along with this. Yes or no? Can we go forward? Yes, we are slowly moving into our deductions and trying to close it. Okay, next kind of deduction, Rahul, is called as interest on borrowed capital. What deduction? Interest on borrowed capital. Income tax is coming and saying that, boss, if you have bought a loan which you are going to incur interest on, tell me why did you take the loan? You tell me, Rahul, I've taken the loan for my personal purpose. Income tax will say interest is allowed, not allowed. So I'm saying if you have taken the loan for personal purpose, income tax says interest is not allowed. You're saying, no, Rahul, I've taken it for business purpose. Then I'll come and say, okay, tell me what is the business. What business do you want to take it for? I'm saying, sir, I actually want to sell my working capital. Basically, I want to finance my working capital. Too much money inflow and outflow is happening. So I'm taking it for my regular operations. Income tax will say, allowed, not allowed. Allowed, because it is for normal operations. Therefore allowed. Coming to the asset side, I'm saying, no, sir, actually I've taken it for buying assets. Then I'll come and ask, okay, tell me, is the asset ready, not ready? Or not ready? You say, no, sir, asset is not ready. I will come and say, okay, then it is borrowing cost. Yes or no? Accounting standard, borrowing cost. I'll come and say, boss, if it is borrowing cost, any interest cost which you incur up to the date on which the asset is put to use will be capitalized. Yes, so I am simply coming and saying, if at all you have incurred an expense and that expense asset is not put to use yet, the expense will be capitalized. Rahul, no, asset is ready. I am now trying to claim the expense. Can I claim? Go ahead and claim. No restriction. Yes or no? Which means, Rahul, simple example. Let's say, for example, you have an asset. Let's say, for example, you are creating a building. What are you creating? Building. Yes. Now, for this building, you took a loan on 1st April 2017. You took a loan on 1st April 2017. Building got completed on 30th June 2023. You repaid the loan. What did you do? You repaid the loan on 31st March 2025. 31st March 2025. Tell me, for what period to what period did you incur interest first of all? When did the interest start and when did the interest end? June. Where is the June? When did the interest start? The interest started from 1/4/2017. When did the interest end? 31st March 25. Yes or no? This is the loan period. So for this loan period is what I'm going to pay interest. So when did the loan start and when did the loan end? The loan started on 1st April. The loan ended on 31st March. So that will be the interest period. That will be the interest period. Rahul, now this whole interest period, can you claim as deduction under P&L? No, because asset was completed only on 30th June. Yes or no? So what I will come and say is, Rahul, I will split this into two. I'll split this into two. 1st April 2017 to 30th June 2023. I will say you have to capitalize. Why, Rahul, you have to capitalize? Because asset is not put to use. The asset is not put to use. Then balance interest. What is the balance interest from 1st July 2023 to 31/3/2025? You will what? Charge to P&L. You will charge to P&L. When you say charge to P&L, it means allowed, not allowed? Allowed. Subject to 43B. Subject to 43B. Yes or no? Yes. Because I am coming and saying in 43B it comes and says if you are going to incur an expense which you are going to pay to a bank, you need to pay before the due date of return filing. If you are paying before the due date of return filing, you claim it as expense. Otherwise, you will not claim as expense. Yes or no? Yes. Now there is this one very famous question which came in exam, which I wanted to answer. Okay. The question which came up in exam is, there is a person who has taken a loan. The loan is taken for a building. Loan is started on 1st April 2017. Okay. Loan ended on 31st March 2025. Anna, for this whole period, he has not paid a single rupee interest. For the whole period, he did not pay a single rupee interest. How many years? It is almost about 8 years. Almost about 8 years. 18, 19, 20, 21, 22, 23, 24, 25. 8 years. 8 years he has not paid a single rupee interest. Okay. In this case, what is the tax treatment, Rahul? In this case, what is the tax treatment, Rahul? Now understand, even if you have not paid the interest, there is no restriction in the capitalization part. Yes, nowhere in income tax it comes and says you cannot capitalize just because you did not pay the interest. Okay, that provision is only there for P&L items. So even though you have not paid a single rupee interest, Rahul, can you still capitalize the interest cost? Yes, you can capitalize the interest cost. Rahul, will I get depreciation on it? Yes, no restriction. So till 30th June 2023, you will have no restriction. You can claim everything as a depreciation. The problem comes only from July. From July, you will have a 43B clause. So therefore, it will be disallowed. So understand, the provisions of paying within the due date is only there for P&L items. It is not there for capital items. So even though you have not paid on time, you can still capitalize. You cannot claim it as a deduction. You can still capitalize, claim depreciation, but if you want to claim it in P&L, then you have to do 43B. Yes or no? Keep this in mind. A very simple, minute thing for you to answer. On here, if you notice, I have put for business purpose, for working capital fully allowed as a deduction, for capital assets, interest up to the date on which the asset is first put to use, I will say added to the cost of the asset, whether paid or payable. Highlighted. On the right side, interest after the asset is put to use. If you notice, I have said allowed subject to 43B. So there it is payment basis only. You have to pay at least by the due date of return filing. You will get the deduction. You notice very carefully, I was talking about borrowing cost. Don't confuse yourself. Borrowing cost comes and says that you can capitalize only up to the date on which asset is ready to use. I am in income tax. Income tax is up to the date of which asset is put to use. So therefore, you have to understand the difference. Ready to use in accounts, put to use in income tax, which means there will be some small time gap. Where you have not put to use the asset. Income tax will capitalize it. Accounts will allow it as a deduction. There will be a small minor difference. Rahul, in practical world, does that really come a difference? Practical world, does it really come a difference? No, technically no. Okay, I have never seen a scenario where a company will voluntarily admit that he has bought an asset but he has not put to use. Generally does not happen. Generally does not happen. A very rare scenario could be a scenario where the company shut down, strike போயிட்டு இருக்கு, அந்த மாதிரி scenarios and all. It can happen that there will be a difference. There will be a difference because obviously you would have bought the asset but you have not put to use. You have not put to use. There could be minor differences there, but apart from that, if you technically ask me, in practical world never happens that a date of put to use will be different from date of acquisition. Normally it will be the same. Normally it will be the same. Yes or no? Yes or no? This is what the logic is. Clear till here? Can we go forward? Yes. So this was the first special scenario. You're talking about interest on borrowed capital. Next one. Next one is called as employer contribution to pension scheme. Employer contribution to pension scheme. Hold the discussion. We will discuss this when we do chapter 6. You can put it as refer chapter 6. You can put it as refer chapter 6. Right now not relevant. We will hold it the discussion. We will do it after chapter 6. We'll do it after chapter 6. Can we go forward? Yes. Next one is called as contribution for welfare of employees. Contribution for welfare of employees. Please mark this as important. Please mark it as important. Okay. Now, for you to understand this, you need to first understand a salary structure. Now, understand, you are planning to join a company. The company comes and says, I am going to give you a CTC of 10 lakhs. What lakhs? CTC of 10 lakhs. What do you mean by CTC, Rahul? Cost to company. Yes. So if you join after you qualify CA, you are getting basic salary of, at best minimum you should get 8 lakhs. At best minimum you should get 8 lakhs. You can go up to 50 lakhs also. Average salary 10 lakhs. So you have joined a company saying, I'll get you a salary of 10 lakhs. Now, when you see the word CTC, you will think, Rahul, 10 lakhs. Okay. Just for convenience sake, what I'm going to do is I'm going to make it 12 lakhs. Technically per month is 1 lakh. So when you told that you are getting a salary of 12 lakhs, you are very excited. Because you told Rahul, per month I'll get 1 lakh. But actually what happened is when you opened your bank account, every month only 60,000 rupees is coming. How much? 60,000 rupees is coming. You thought, Rahul, no, I went to a salary of 1 lakh, but right now in bank only 60,000 is coming. Why, Rahul, only 60,000 is coming? This 60,000 is called as take home pay. What pay? Take home pay. Rahul, what is the difference? Understand, when a company gives you CTC, it is not mandatory that everything which the company gives comes to your pocket. In a simple example, if I have to do a CTC, what would happen is, company would come and say that my basic salary is, let's say out of 12 lakhs, my basic salary will be 50%, therefore 6 lakhs. Then they're coming and saying, Rahul, I'll give you an HRA. HRA will be, let's say 3 lakhs, for example. Will be how much? 3 lakhs. Total is how much? 9 lakhs. Then company is coming and saying, I am also planning to contribute to PF for you. I'm planning to contribute 12% of your basic. How much? 12% of your basic, which means 72,000. Yes or no? Apart from this, the balancing figure is RFA. What FA? RFA. Total bana? 9,72,000. 2,28,000. Correct? 2,28,000. Yes, 2,28,000. So this is how your component structure is. This is what the company agreed to give you. Now tell me, from these items, what and all will come to your hand? Will basic come to your hand? Yes. Will HRA come to your hand? Yes, because it is an allowance. Will PF come to your hand? No, PF will not come to your hand. It will directly go to government. Will RFA come to your hand? No. What will happen? RFA will not come to your hand. Instead, you got a house. So technically, how much did come to your hand? 9 lakhs. Yes or no? Now 9 lakhs by 12 is how much? 75,000. Yes. So, at best you could have got 75. At best you could have got 75. But the problem is what is happening now? You are coming and saying, Rahul, 75. You are coming and saying 75. But income tax is coming and saying, no, Rahul, wait. If employer is contributing, employee should also contribute. Yes or no? If employer is contributing to PF, employee should also contribute to PF. No, there are two options. Option number one, I'll come and say, employer will contribute your PF. You go and separately contribute your PF. Now tell me, I am an employer. You are working for me. I am coming and saying, for you, I am going to pay 72,000 per year. For you, I am going to pay 72,000 per year. I went and I deposited. Then I am coming and saying, you go separately and pay. Do you think you will be on time to pay? No. When I am already paying, do you think it makes sense for you to separately pay? Do you think it makes sense? No. So I will come and say, do one thing, boss. Instead of employee paying the money directly, let the employer collect it from the employee. Yes or no? I will say, anyway, I am going to pay your money. So I will pay your side of the money also. Now tell me that employee contribution to PF will be taken away from which of these numbers? Will it be added extra after 2,28,000 or will it be removed from the 6 lakhs? It will be removed from the 6 lakhs. So technically, I am now not going to get 9 lakhs also. I am going to get 9 lakhs minus 72,000. Yes or no? Yes, 72,000 is basically 6,000 per month. Correct, no? It's basically 6,000 per month. Yes. So technically, you will get in your hand 69,000. Yes, yes. Now, if you are getting 69,000, you will think, Rahul, where is the difference? The difference is going in income tax, TDS, income tax, whatever. Yes, the company will come and say, you are anyway 10 lakh slab, which means you have to pay tax. Instead of you paying tax to government, I will collect TDS. So what happens? They are collecting 4,000 from you per month as TDS. 14,000. Technically arriving at 10,000 now. Technically arriving at 60,000. So what hits your bank account is 60,000. What hits your bank account is 60,000. Now at this point, notice and tell me, Rahul, what and all is your salary actually? What and all is your salary? Is 6 lakh your salary? Yes. Is 3 lakhs your salary? Yes. Is 72 your salary? Yes. 2,28,000 also salary. Everything is your salary, but what got in your hand is only 60,000. What got in your hand is only 60,000. Does it mean that Rahul, balance items you will not get? You will get. Just that it is not in the form of cash. It is in the form of other benefits. Yes or no? Yes. Now notice carefully. Your taxable salary is 72,000 for PF. Your taxable salary is 72,000 for PF, which is employer's contribution. Hey, does employee contribution sit in this 12 lakhs? Does employee contribution sit in that 12 lakhs or not sit in the 12 lakhs? It does not sit in the 12 lakhs. Why, Rahul, does not sit in the 12 lakhs? I have to pay only 20 lakhs. I have to pay you only 12 lakhs. You had to go and give government your contribution. Instead of you giving, I am taking it from your salary and giving. So technically, I am an agent. Who is the agent? Employer is the agent. Yes or no? So tell me, employee contribution which the employer has, is merely because of his agent principal relationship, or is it because it is a salary? It is because of an agent principal relationship. So tomorrow, if I am taking money from you for me to deposit to government, will it ever hit my P&L? No. Will it ever be my expense? No. The only thing which will be my expense is employer contribution. Yes or no? So what I am coming and telling is, Rahul, when you are planning to contribute to funds, do one thing, split into two. One is called as employer contribution. One is called as employer contribution. One is called as employee contribution. One is called as employee. Hey, Rahul, you just now told me nothing will hit your P&L. Why are you breaking? Understand, when you generally sit in market, you never check the P&L. You actually check the balance sheet. Because balance sheet, you have a separate account called as provident fund payable. Yes or no? So what you'll do is you generally check your balance sheet. Now in balance sheet, what you have an GL called as account called as provident fund payable. In that, will it be employer contribution, employee contribution, or both? It'll be both because I've got money from employee also. So what I'm doing is I'm taking that balance sheet line item called as provident fund payable and I'm splitting into two. Employer and employee, yes or no? Now I'm in the employer. I know that whatever provident fund payable, part of it is employer. Now that expense, did I claim? Did not claim? I claimed. Yes. So income tax is coming and saying, since you have claimed the expense, you need to prove it to me that it is genuine. You need to prove it to me that it is genuine. How do you prove it that it is genuine? It should be an approved fund which you are going to make the payment. What are you planning to do? You should make the payment to an approved fund. Rahul, what do you mean by approved fund? When you did intern, you would have learned PF has four types. One is called as statutory PF, public PF, recognized PF, unrecognized PF. Yes or no? The first three items are approved. Fourth item is not approved. So I'm coming and saying, boss, if you are planning to make some payment for employer contribution, make sure that the payment is happening to an approved fund. Why, Rahul? Because if it is not approved fund, who's handling the fund? Company itself is handling the fund. So company will come and say, I am planning to give to my employee, but I will give it whenever I feel like it. Do you think income tax will be okay with that? Do you think income tax will be okay? No. So they came and said, Rahul, first of all, ensure that the payment is happening to an approved fund. I'm saying, no, Rahul, actually payment is happening to unapproved fund. Income tax will come and say, if the fund itself is unapproved, don't come and ask me for deduction. When you make the payment to the fund. Come and ask me the deduction when you make the payment to employee. Yes, so not allowed. On what? Fund payment. Not allowed on fund payment. Rahul, why am I not allowing? Very simple, ma. It is your own fund. Who's managing? You are only managing. Do you have any rules and regulations in that? No. So tomorrow what you'll come and say? You will take that, you will go to employee and come and say, I'm planning to give you 72,000. But I'll give you when you retire. Until you retire, I will use the 72,000 for my business. Legal, not legal. Technically not legal. Yes or no? So I'm coming and saying, boss, then technically you are not planning to give itself. I will not give you right now. You prove it to me that you'll actually incur the expense. When will you prove it to me? When you actually pay the money to employee. Until that time, will I allow? Not allow. So I'm saying not allowed on fund payment. Allowed when? Given to employee. Very good. Hey, logic is clear. I have created my own fund. I am not even having regulations. So I am coming and saying, Gayatri, I am going to pay you 72,000. But I don't know when I will pay. When I have the mood, I will pay it to you. Does it make sense? No. Then in that case, have I incurred expense? No. I am just keeping some money and I am telling it is your pay money. I am keeping a money and I am saying it's your money. Will you agree? No, you will not agree. When will you agree? When you get the money. So I am saying not allowed on fund payment, allowed on employee payment. Agree, not agree? Agree? Come to the left side. I am saying, no, Rahul, it is an approved fund. When it is approved fund, it is regulated, not regulated. It is regulated, which means if you make the payment to the fund, can the money be withdrawn from the fund by employer? No, it can only be withdrawn by employee. So meaning, if you make the payment to fund, it is as good as paid to employee. Yes or no? So I am saying subject to 43B, which means make the payment up to due date of ROI. Make the payment up to due date of ROI. You say, Rahul, I have made the payment before the due date of ROI. I will say allowed. You say, no, Rahul, I have paid the money after the due date of ROI. Who's ROI, ma? Employer or employer? Who's ROI? Employer or employer? Employer. Why, Rahul? Because employer has to prove that he wants the expense. Employer wants to prove that he wants the expense. So before he files his return, he has to prove it. So after the due date of ROI, I am saying allowed again, but allowed only in year of payment. Understand. 43B comes and says that if you are planning to make any employer contribution to PF, ESI, any other approved fund, I will allow the deduction. I will allow the deduction only if you make the payment before the due date of return filing. If you make the payment after the due date of return filing, that year it will be disallowed, allowed in the year of payment, allowed in the year of payment. At the end of the day, is the disallowance temporary or permanent? The whole disallowance is temporary. The whole disallowance is temporary. I am telling boss, it's a temporary disallowance. When you make the payment, you claim the deduction. When you make the payment, you claim the deduction. Agreed, not agreed? Agreed. Now come to the right side. Come to the right side. You have an employee contribution. You have an employee contribution. Now this employee contribution you have got from the employee as an agent, with the promise that you will pay to government. With the promise that you will pay to government. Income tax comes and says, boss, you are an agent who has got this money with the promise to pay to government. Within what date? Within what date? These acts, these PF will have a PF act. Yes or no? PF act will give you a date. So I have promised my employee that I am collecting money from you with a promise that I will pay to the government on that date. Yes or no? I'll pay to the government on that date. Now if I am promising to pay on that date, I should follow that date. Yes or no? Yes or no? If Gayatri has come and trusted me saying, Rahul, I am giving you money, deposit on the 5th. I should deposit by 5th. If I am depositing on 6th, am I cheating Gayatri? Not cheating Gayatri. I am cheating Gayatri. Yes or no? So income tax comes and says, Rahul, employee contribution. Employee contribution. Tell me, have you paid it to whom? To the fund. Have I paid it to the fund within the due date? Rahul, but what due date? Am I talking about due date of ROI? No, I am talking about due date of act. Due date of act. Rahul, what are the due dates of the act? Not relevant from exam. Not relevant from exam. Exam will come and tell you. Exam will come and tell you. Just to tell you. PF due date is 15th of next month. PF due date is 15th of next month. ESI and all due date is 20th of next month. Example solra. Exam will give it to you. But I am coming and telling that, Rahul, if you have taken in money from employee, let's say in the month of March, you have to deposit it by 15th of April. If you have taken it in July, you have to deposit by 15th of August. This is what your regulation is, because you are the employer. You are the employer who is having someone else's money. So you are saying the payment has happened to the fund within the due date of respective act. You got the money from the employee. You have paid it to the fund within the respective act. Have you done your job properly? Not done your job properly. I have done my job properly. Are you a good agent? Bad agent? I am a good agent. Do I have to penalize you for this? No. So I am saying nothing to be done, no implications. Nothing to be done, no implications. Rahul, why no implications? Why is it not income? Why is it not expense? Can I claim expense? No. Understand, this is employee contribution. Is it hitting your P&L? No. It is just a balance sheet item. You have taken money to give someone else. Are you going to be liable for anything? No. So I am saying no implications. Straightforward. Yes. I am saying no, Rahul, this payment has happened to fund. This payment has happened to fund when? After the due date. Rahul, what due date? Respective act. After the due date of respective act. Income tax is coming and saying, you are an agent. I trusted you with employees' money. You should have taken the money and given it to government on time, meaning 15th of next month. Rahul, you paid it by 16th. Have you done a good job or a bad job? You've done a bad job. Because of you doing a bad job, employee lost interest. Yes or no? Because PF Act will come and say, if you deposit by 15th, I will give you interest from 15th. But if you give it on 16th, I will assume that the interest is coming from the next month. Yes or no? Because their due date is 15th. So they will come and say, if you give the money on 15th, I will assume interest from 15th. If you give it on 16th, I will say that month no contribution happened. This contribution is of next month. So interest will start from next month 15th. So I have lost interest. Who has lost interest? Employee has lost interest because of employer default. Income tax is very unhappy now. Right now. Income tax is saying you have used employee's money. Employee gave you money to deposit by 15th. You deposited it by 16th. The reason you deposited by 16th is because you are now using employee money in your business. You are now using employee money in your the money without his permission also. You're using his money without the permission also. I'm very unhappy with you, Rahul. I'm very unhappy with you, Rahul. This will be added to my income statement. What am I doing? I am adding it to my income statement. Hey, first of all, question, is it my income? Is it my income? No. Is it my expense? No. I am adding it because I am telling you are using someone else's money. Are you obligated to use someone else's money? No. I am saying it is added to the income. I am adding to the income. Whose income am I adding, Rahul? Employee's contribution I am adding. Understand very carefully. Understand very carefully. Employer contribution was your expense. So I am saying either you can claim the expense or I will disallow the expense. Employee contribution was neither income nor expense. So now I am adding it as. I am adding it as. Yes or no? Yes or no? I am saying this is deemed as an income. This is deemed as an income. Section is given as 224 something. I think it's 224.17 something. Okay, not relevant from exam. Not relevant from exam. I'm telling that the income tax is coming and saying because you have defaulted the payment of PF. Because you have defaulted the payment of PF, whatever money was due, that money will become liable as income as per section 224. As per section 224. So you went to the employer now, he came and said, dear employer, you paid the money on 16th. You paid the money on 16th. You have cheated the employee. Therefore, I am adding it as income. I am adding it as income. Employer came and said, yes sir, okay. Yes sir, okay. I understand my mistake. I understand my mistake. I paid 1 day delay, sir. I paid 1 day delay, but don't worry. Next month, next day I paid it. No, next day I paid it. So in the year in which I make the payment, you claim, you allow me an expense. You allow me an expense. So I asked a genuine request. What request? I told sir, since I used his money, I add it as an income. The moment I pay the money, you give it as expense. You give it as expense. Correct or not? Hey, technically, is it your expense? No. Technically, is it your income? No. You want nothing happening. You want nothing happening. So you said, sir, please give it as an expense later on. Please give it as an expense later on. Genuine request, non-genuine request. Genuine request. Income tax said not allowed. Income tax said not allowed. Income tax said I told you to give it by 15th. I told you to give it by 15th. Did you give it by 15th? No. Will I allow you now? Is this a temporary disallowance or a temporary addition or a permanent addition? It is an permanent addition. Boss, if you have an employer contribution, it is your expense. Pay within the due date, I will give you the deduction. Don't pay within the due date, no problem. Claim the deduction in the year of payment. Employee contribution. This is the money you have taken from employee. Please deposit by the due date of respective act. If you deposit, no problem, you have done a good job. If you don't deposit by the due date of respective act, I will add it to your income permanently. I will not even give a single deduction. I will not give a single deduction. Yes or no? Yes or no? Now, this became a huge problem. This became a huge problem because understand no, you are telling that Rahul, employer contribution you allow temporary also. Employee contribution you are saying permanent. Now, question to you. Gayatri is working in my company. Gayatri is working in my company. I am going to pay PF for Gayatri. Okay. Now, I am going to pay some PF from my side. I am going to collect PF from your side. Whenever I make a payment, will I make both the payments together or will I make only one payment? If I have to make a payment of Gayatri to the PF authorities, I will pay employer and employee together or I will pay differently. I'll obviously pay it together. I'll obviously pay it together. The day when Gayatri gives me the money, that day along with my money, both together I'll pay it to PF together. Yes or no? Yes or no? Now what happened is, Rahul, when I made the payment, I by mistakenly made the payment on 16th. I by mistakenly made the payment on 16th. Now on the 16th, I paid employer also, I paid employee also. Employer got allowed, not allowed. It got allowed because I made late, but I still made it. Because I still made it. Employee got allowed, not allowed. Not allowed. Yes or no? Yes. Now there became a huge problem. There became a huge problem. We came and said, sir, I don't understand the logic. One day I'm making two payments. One payment you are saying allowed, one payment you are saying added. One payment is saying allowed, one payment is saying added. There is no logic, sir. There is no logic, sir. Section is wrong. Section is wrong. Maybe you did not write the section properly. Maybe you did not write the section properly. So what happened is we all went to courts. We all went to courts, and we told the court, dear court, I think income tax is foolish. I think income tax is foolish. Something is wrong with income tax, sir. Same provision, same payment you are going to make. Same provisions, same payment you are going to make. One payment they are saying allowed, one payment they are saying added, one payment they are saying permanent, one payment they are saying temporary. Sir, logic illa. Match agmatiddu. Sir, ignore the provision on the right side. Ignore the provision on the right side. You allow me the payment for employee also. You allow me the payment for employee also. Supreme Court also came and said, yes, boss, what you are telling is right. What you're telling is right. It doesn't make sense. It doesn't make sense. Why should I give a permanent addition for one item? Why should I not give permanent addition for another item? There should be some issue. There should be some issue. Supreme Court itself came and said, no, boss, this is wrong. You do employee also temporary. You do employee also temporary, which means disallow it right now, allow it in the year of payment. Allow it in the year of payment. This is done by whom? Done by Supreme Court. This is done by Supreme Court. No. Income tax came and said, dear Supreme Court, your job is to interpret law or make law. Interpret law. I have already put the law very clearly. Is there an issue here? Is there an issue here? Is there any confusion? There is no confusion. How did you change the law? How did you change the law? Your job is only to interpret the law. Don't come and change my law. Don't come and change my law. You are not above me. You are not above me. You are below me. Okay. I tell something, you have to follow. I tell something, you have to follow. But Supreme Court gave a decision. Should it be followed? Not followed. Should be followed. Income tax happy? Not happy. Income tax said, boss, forget of Supreme Court. Forget of Supreme Court. Next year came an amendment. Next year came an amendment. Next year amendment came and said, for the purpose of this section, I am hereby explicitly clarifying that employee contribution has nothing to do with 43B. Employee contribution has nothing to do with 43B. It has to be disallowed permanently. It has to be disallowed permanently. Hey, now, is the amendment amendment or is it a clarification? It's a clarification. So I came and said it is hereby clarified that the employee contribution has nothing to do with 43B. Has nothing to do with 43B. The moment you give a clarification, it means what you did earlier also was right only. Correct or not? Which means the clarification has made a retrospective change or a prospective change. Has the clarification made a retrospective change or a prospective change? Purilia, I'm asking, when the clarification came, I am saying it is clarified that this section had nothing to do with 43B. When I am saying this section has nothing to do with 43B, am I clarifying something or am I introducing something? I am clarifying something. If I am clarifying something, what am I clarifying? I am clarifying something which is already there. Which means if I am clarifying it today also, it is applicable from the day on which the act was introduced. Yes or no? So which means this clarification makes the provision applicable retrospectively or prospectively? It makes it retrospectively. Yes or no? So what happened is, income tax came and said it is clarified that this has nothing to do with 43B. It became a retrospective change. It became a retrospective change, which means when Supreme Court allowed it, now it got allowed, not allowed. It got disallowed. Yes, the income tax went and said, was for everyone who Supreme Court allowed, bring your file back. Bring your file back. I have changed the law. I have changed the law. This has become a retrospective law. Come back and give me the tax. Come back and give me the tax. Now who's superior? Income tax is superior. Yes or no? I told you on the first day itself. Interpreters can change the law and it can become the law of the land as long as the law is in force. The moment the law changes, interpretation also changes, which means Supreme Court decisions become invalid. Supreme Court decisions become invalid. So today as you stand, Act comes and says employer contribution temporary, employee contribution permanent. Is there any possibility for you to claim temporary? No, not possible. Clarification clearly given. Clarification. Understood, not understood. Give an example. What has happened is, you are in the month of March. In the month of March, you are deciding to pay employer contribution of 3,000. Employee contribution of 3,000. Employee contribution of 3,000. Yes or no? You are planning to pay 3,000 of employer contribution, 3,000 of employee contribution. If you are in the month of March, due date is 15th April. Due date is 15th April. Yes or no? Yes. Now what happened is, by mistakenly you were not able to make the payment on time, so you made the payment on 15th May. You made the payment on 15th May. Tell me what will happen. Tell me what will happen. Which 3,000? First 3,000 will be allowed as deduction, okay? This item is there in the P&L, which is not there in the P&L. Tell me employer is there in the P&L or not there in the P&L? Employer is there in the P&L. Employee there in the P&L, not there in the P&L. It is not there in the P&L. If employer is there in the P&L, I have to check for allowance or not allowance. Yes. Have I made the payment before the return filing due date? Have I made the payment before return filing due date? Yes. Therefore, expense allowed, not allowed? Allowed. So, which means it is already there in the P&L. Do you have to do anything? Nothing. So, therefore, no adjustment. Therefore, no adjustment. Yes or no? Yes or no? Come to the employee one. Come to the employee one. Is it there in the P&L? No, it is not there in the P&L. Have you made the payment on time? Not on time. Have you made it on time? Not on time. You have made not on time because you have to pay it by 15th April. You have paid it by 15th May. Is it on time? Not on time. Is it not on time? Therefore, if it is not on time, you have to add it to the income. So, I have to now add this amount to my income permanently or temporary? Permanently. So, add permanently. Add permanently. Clear? Not clear? Clear? Yes. Questions like this is what will come in exam. Be careful about it. Okay. They'll come and say in the P&L is disclosed an employer contribution and employee contribution. Employer contribution is this much. Employee contribution is this much. This is the payment for the month of March for which payment has happened on 15th May. What will you do? You'll come and say, Rahul, if employer is there, then you will leave it. If employee is not there, you will add it. If employee is also already there, then you will ignore it. You will come and say, anyway, I had to add it. You have itself added it. Therefore, leave it off. Therefore, leave it off. So, what is there in the P&L is what the criteria is. What is there in the P&L is what is the criteria. You have to be extremely careful in the exam to know whether it is already there in the P&L or not there in the P&L. Clear? Clear? Yes. Any doubts in the PF part? Okay. This is a very important provision from exam perspective. It has very one line item. On the compulsory question, one line adjustment only will come, but that one adjustment will make an impact. Okay. It will kill or break you. Okay. So, be careful about it. All clear? Yes. Let's read it together. I am saying contribution of welfare to employees. You have two kinds of contribution. One is called as employer contribution. One is called as employee contribution. One is called as employer contribution. One is called as employee contribution. I am saying employer contribution if the payment has happened to a recognized fund or an approved fund or an approved gratuity fund. When you deposit before the due date of return filing, you will allow it as a deduction. If you don't deposit by the due date of return filing, I will say it is disallowed right now but allowed in the year of payment. Disallowed right now but allowed in the year of payment. I am saying, no, Rahul, I have not made the payment to approved funds. I will ignore it off. I will ignore it off. It is not allowed as deduction. It is not allowed as deduction. Yes or no? Yes. Next is my employee's contribution. Next is my employee's contribution. I am saying I have deposited it by the due date of employer before the due date of respective laws. Before the due date of respective laws, I am saying no problem because you have done it on time. Because you have done it on time. Otherwise, I am saying, no, Rahul, I have not deposited by the due date of respective act. I am saying you have cheated the government. I am sorry, you have cheated the employee because you have held his money. You have held his money. I will add it as an income permanently. No deduction subsequently also. No deduction subsequently also. After the Supreme Court decision came, this is what was given as a clarification. This is what was given as a clarification. It says it is explicitly clarified that the provisions of 43B does not apply on employees' contribution. And hence, the benefit of paying such contribution up to the due date of return filing of income cannot be availed. Now, I am explicitly clarifying, meaning it is prospective, retrospective. Retrospective. It is retrospective. Clear? Clear? Yes. This was your next special item called as PF contributions. Called as PF contributions. Any doubts? Can we go forward? Can we go forward? Yes. Yes, Ritanya.
Ultimately, when they pay, it is allowed, right?
Yeah.
This is payment to the fund, right?
I'm talking about payment to fund. If you read the heading, it says contribution for the welfare of employees to the fund.
Oh.
Okay.
And that due date of payment to provident fund.
Okay.
For both employees and company, actually due date is 15th of the next month.
Technically, yes.
Companies, they allow it even if you pay until the date.
Exactly. Yes. Technically, as per the provisions of PF Act, it is 15th of next month for both employer and employee. Okay, but income tax has the stupid logic where they come and say even if it is employer, you can claim till return filing, but if it is employee, you have to pay on that respective date itself. Okay, that is exactly why the whole discussion, because Supreme Court people went and said, boss, for employer and employee, PF Act is saying the same date only. And for employer, you're giving time till return filing, but for employee, you're asking an earlier date. It doesn't make sense only. Okay, so there is something wrong with the section. I think you can ignore the section and let's do only 43B for both is what the criteria was. Supreme Court also felt it is genuine, but then income tax came and said, forget genuine and all. I have my laws. I will follow my laws. Yeah, this is a huge problem. I mean, in the market right now, also it is going on everywhere. Okay, every company is facing this issue because I'll tell you a simple example. I'll tell you. Okay, there can be genuine scenarios also. I'll take you an example. What is happening is, let's say for example, you are planning to join the company. Okay, now every company has a cutoff period. Okay, which means if you are joining on 31st March, do you think company will give you that Monday salary? Technically no. Okay, companies generally have a cutoff period where they'll come and say, if you have joined after 15th March, if you have joined after 15th March, that month's salary will not be given to you. It will be given with the next month's salary, which means next month when you get salary, you will get it for 45 days. Correct or not? Yes. So generally every company has this policy that if you are joining after 15th of next month, I will not take a part of the 15th of next month. I'll take it as the next month's salary. I'll take it in the next month's salary. Now technically think about it. I have joined in the month of March 16th. I have joined on March 16th. I'm going to get the salary only in April end. Which means technically employee contribution I will have in my hand only in the month of April. If I am having it in the month of April, I will deposit by 15th of May. Now that to 15th of May, I have both employer also in my hand, employee also in my hand. Both are going to be deposited by 15th May, yes or no? But technically speaking, your date of joining is 15th March. So PF Act comes and says, boss, since you are joining on 15th March, you should have paid the money by 15th April. Now I am coming and saying, sir, from employee itself, I got it on 15th May only. Yes or no? From employee itself, I got it on 15th May, so I could have deposited only by 15th May. But PF Act is saying deposit by 15th April, which means there is a genuine delay. In that delay, who is being responsible? Who is held responsible? Am I held responsible or someone else is responsible? Technically, it's a mistake of employee. But income tax is saying employer will take disallowance. That too permanently. Who's at fault? Employee. Who's bearing the loss? Employer. Understand the issue? Yes, we have made multiple representations before department. We have told multiple people that, sir, understand this is an issue. It is not being solvable. You cannot be so strict on me. Okay, there are generally cases where you have a 1 month delay or a 2 month delay. You have to help me. This cannot be an issue for me. But income tax is saying, no, boss, 1 day delay also, give it permanently. And I am saying, sir, permanently and all is too much. At least allow me later on. Income tax is nothing doing. Permanent means permanent. Get lost. Everyone is facing issues. And I know because I am working in a company right now. Okay, my company is a staffing company. My company has 66,000 employees. Okay, now imagine 66,000 employees. Do you think it is possible for me to genuinely pay everything on time? Obviously no. Okay, employees will be very local employees also. Employees will be very base level employees who don't even know what is PF. What gets in his bank account is his money. For him, PF and all means nothing. Okay, these people will be so poor that they won't even have an Aadhaar card properly. Yes, these kind of employees will generally never pay money on time. These employees and all, you come and tell, no, boss, Aadhaar is not linked, so PF will not happen. He's like, forget PF, I don't want it itself. But I have an obligation to pay PF, which means what happens for these employees? Lifelong, I will not be able to pay PF. And suddenly one day I will tell, no, boss, nothing is happening, pay PF. He will give me suddenly an Aadhaar linking. 3 months later, 4 months later, I'll make the payment to department. That day what happened? Employer contribution got allowed. Employee contribution got disallowed. My company is ending up taking 4 crores worth of disallowance every single year. 4 crores. Imagine. Small number or big number? Big number. Every single bloody year, we take 4 crores worth of disallowance. Not on employer, employee. And this is not even like the 1 month delay. It is the contribution fully. 4 crores worth of employee contribution, 1 day delay also, I am taking a full disallowance every single year. I am paying taxes on that bloody nonsense. Idhula vera enna comedy na, because I am paying delay to PF Act, PF also I am paying interest and penalty. So for the same contribution, income tax is taking disallowance, PF is asking for interest and penalty vera. So 4 crores I am paying to income tax, then another interest and penalty I am paying to PF Act also. Does it make sense? Do you think I can run business like this? Doesn't matter. Income tax doesn't care. Income tax is like, boss, whose income it is? Forget it off. Take income tax off. So we have made multiple representations. Have a genuine case. This is a clear cut genuine. 15 sort of payroll will happen next month only. You cannot make the pay up today. No possibility. There is absolutely no possibility because you don't know what the salary is. in the process of next month பண்ண போறீங்க. Yes or no? For which can you keep running your payrolls? No. So which means can you make the payment? No. It is genuinely not possible. Irunalo they don't care. They are like, no, take the payment right now. Where will I get the money for making the payment? I don't have the money itself to pay. Yes or no? But yeah, this is how income tax is. Sometimes they don't listen to all people. Okay.
Sometimes even the employee himself can opt directly.
Sometimes even employee can.
No, employee himself can directly deposit.
He can't. Technically not.
Oh, it's only the company which has to do it.
Normally that's how PF Act permits it. If employee is going and contributing, no, that's like an you can deposit in PPF yourself. Okay, generally you are given an option to only deposit money in PPF. You are not generally given money to options to give deposit in a account which employer is maintaining. Okay, so normally you are not permitted to do it. And no matter how hard you try, I don't think employee is anyway going to do it also. So yeah.
On the company and having it face once.
Exactly. That's the whole issue. Yeah. It's okay to that. Compulsorily? PF Act is there. No, we have an act called as Employees Provident Fund and Miscellaneous Provisions Act 1952. It says that if an employer has more than 10 employees in a company, you have to mandatory give 12% of the contribution as employer contribution, and employee also has to contribute same amount. It's given in the act. You cannot violate it. If you don't do, PF Act will come and put a scrutiny on you. So if PF does not want scrutiny, income tax will do scrutiny. Both are kicking your asses, nothing else. Okay, some nonsense is going on. Yep. Anyway, clear with the section? Can we go forward? Yes, perfect. Let's go forward. The next section is called as bad debts. The next section is called as bad debts. We are discussing about what? We are discussing about what? We are discussing about a writing off of our loss. A writing off of our loss. Income tax is coming and saying, boss, you had planned to get some money from a debtor. You had planned to get some money from the debtor, but debtor is not ready to give the money. Debtor is not ready to give the money. You will write it off as bad debts. You write it off as bad debts. Income tax said, I'm okay with your bad debts. I'm okay with your bad debts. I will let you take the bad debts. I will let you take the bad debts as long as you follow accounts properly. As long as you follow your accounts properly. If you pass all the journal entries which accounts is asking for you, I will allow the bad debts. I will allow the bad debts. So think about the history and tell me what journal entries will you pass for a bad debts. Start from the top. Start from the top. What are the journal entries which you will pass for a bad debts? First you will make a sale. First you will make a sale entry is. First when you make the sale entries, you will pass an entry called debtor account debit to sales. Yes. So look at the sequence. First the sequence is I will make the sales. I'll make the sales. I've recognized the debtor. I've recognized the sale. Entry is 1 lakh, for example. Okay. Okay. Step number 2. I will go and ask for money. Is there a journal entry for asking money? Is there a journal entry for asking money? No, there is no journal entry for asking money. Step number 3. He comes and says, Rahul, I will not pay the money. I will not pay the money. Now, do you know whether you will get the money or not get the money? You will not get the money. What entry will you pass? What entry will you pass? You will pass an entry called, you know that he is not going to pay. Entry is called as bad debts to debtors. How much? 1 lakh. Yes or no? Yes or no? Yes. Now bad debts to debtor is the entry. Now this is what you are planning to claim. This is what you are planning to claim. Income tax is saying if you want to claim this, you pass the other entries properly. You pass the other entries properly. What is the first entry which you passed? Debtor to sale, which means income tax is coming and saying if you want to claim the bad debts, make sure that you offer the first income to tax. Make sure that you first have offered the income to tax. First you should have passed the sales entry, then only you can have an expense entry. Without even having the sales entry, will I permit bad debts? No, I will not permit bad debts. So first entry is what? You should have offered the income to tax. Second entry is what? I am coming and saying you should have written off the debtor. You should have written off the debtor. So I am saying 2 entries you pass. Entry number 1, you offer the sales to tax. Entry number 2, you should have written off the debt. You satisfy these 2 conditions, the bad debts will be allowed as a deduction. The bad debts will be allowed as a deduction. Yes or no? Yes. So two simple rules to follow. Rule number 1, offered to tax. Rule number 2, right of the debt. Satisfy these two conditions, bad debts will be allowed as a deduction. If you don't satisfy the conditions, bad debts will not be allowed as a deduction. Bad debts will not be allowed as a deduction. Yes or no? Yes or no? Example I'll tell you. An example I'll tell you. What has happened is you have planned to give a loan to someone. You plan to give a loan to someone. You went and asked that person, give me back the loan. Give me back the loan. The person said, I will not give it to you. The person said, I will not give it to you. Bad debt, not a bad debt. It is a bad debt. Yes. Question. Can you claim the bad debt as a deduction? Can you claim the bad debts as a reduction? Can you claim the bad debts as a reduction? No. No, Rahul. Why? Because entry number 1, you would have passed an entry called as loan account debit to bank account. Yes or no? You have given someone money. You have given someone money. So entry will be called as loans and advances account debit to bank account. Yes. Entry number 2 is bad debts to loans and advances. Yes. Now you have satisfied entry number 2. But you have not satisfied entry number 1. Entry number 1, I wanted something to go to P&L. Has the entry gone to P&L or is it a balance sheet item? It is a balance sheet item. Have you satisfied condition? Not satisfied condition. Not satisfied condition. Can you claim the deduction, Rahul? No, you can't claim the deduction. No, you can't claim the deduction. Rahul. When you say you can't claim the deduction, is it a permanent loss? No, you can still claim the deduction, just that you will not get it under 36. We are under 36. If it is not covered under 36, you can claim it under 37. You can claim it under 37. So no problem. See, because at the end of the day, this is a genuine business case. This is a genuine business case. It is just that 36 is not permitting. It is just that 36 is not permitting. Don't worry about it. You can still claim it under 37. You can still claim it under 37. From 36 perspective, you will not be eligible. From 37 perspective, you will be eligible, because in 37, it will not be called as bad debts. In 37, it will not be called as bad debts. It will be called as loss. It will be called as loss. They will come and say this is a loss from return off of loan. This is a loss from return off of loan. So there they will allow it to you. There they will allow it to you. From 36 perspective, you will not get the deduction. Clear? Clear? Any doubts? No? Now what happened is, these are the entries which I passed. These are the entries which I passed. What is the first entry which I passed? Debtor to sales. Second entry which I passed is bad debts to debtors. Yes. Now what happened is, I was claiming these deductions. Called bad debts to debtors. Okay. So what happened is, 1 year when I was claiming this deduction, assessing officer picked up my scrutiny. And he came and said, Rahul, you have claimed a debtor of 1 lakh. You have claimed a debtor write off of 1 lakh. Is the person really bad? I said, sir, I don't know. I went and I asked for money. He did not give me the money. He said, Rahul, if the person is bad, he should have ideally applied for an insolvency. Get me the insolvency proof. I said, no, sir, he's still not applied for insolvency. The person is in losses. He's not ready to pay the money, but he's not in insolvency. So what happened is, income tax officer came and said, Rahul, you have claimed it as bad debt, but technically the person is not bad. He may give it to you in the future. Therefore, this deduction is not allowed. I will not permit you to write off the bad debt. Income tax officer is saying, prove it to me that the person is bad. I am saying, sir, I asked money, he did not give it to me, so I wrote it off. I don't want to care about whether he is going to be insolvent or not. I have taken the loss right away. Because I know he may not pay. If it comes tomorrow, good for me. It's a profit. But I have made a decision that it is a loss for me. So I want the claim. Assessing officer says, no, give me the insolvency certificate. Then only I will allow. Who is right? Is income tax officer right or assessee is right? Is income tax officer right or assessee right? Britannia? Pick a person, that's okay. Pick a person who looks sensible.
So here they are allowing something which is anyway already offered to tax. So
Allowing something na purila.
no, they are the sale income is anyway shown. It's not taxed in the year in which the sale was made.
Correct.
So even if he claims as a deduction, there is nothing additional.
It's not about the additional, no, Ritanya. But today, if you claim it as deduction, what happens? Your profit comes down, no? Is income tax okay with your profit coming down? That is the whole discussion, no? They're coming and saying, boss, you have offered something to sales. Tomorrow, you're coming and saying, I feel that the person will not pay, so I'm writing off my bad debts. But eventually, the person has never claimed for bankruptcy. He may pay to you. He may pay to you. So why do you want to claim it right now? Wait for some more time. Wait for some more time. You may get it. Who knows? Okay. But I do not want to write it off as a bad debt because you are trying to lower your profits and pay lesser taxes. So I don't want to do it. I don't want to do it. This is what assessing officer is saying. Who is right?
So assessing officer also, because many people then they can just randomly write off. Say that.
I mean, they can, but is that a problem? I'll ask you a simple question. You have a friend, okay? You have a friend. Now, the friend was coming to you one day and the friend came and said, I'm in urgent need of money. Give me some money. You gave him some money. Let's say 3 lakh rupees, for example. You gave him some 3 lakh rupees. He told Rahul, 30 days, I'll give it to you back. 100% I'll give you. I'm very trustworthy person, Rahul. No problem at all. 3 lakhs, 100% I'll give you. Okay? 30 days you waited. 35th day did not come. 40th day you called him. He said, yes, Rahul, I'll give you. Yes, Rahul, I will give you. 41st day, 46th day, 47th day, nothing is happening. Payment is not coming. You're also frustrated. Once you went to him and you said, boss, payment right now. He said, no, Rahul, I'm actually short of funds. Right now, no funds and all in my hand, Rahul. But I will give it to you. Yes or no? Later on, what happened is you were somewhere walking on the road. You found that the person is actually sitting in a cafe along with a girlfriend, boyfriend. Anga kudukradhukku kaas irukku. Ana enakku kudukradhukku kaas illa. Yes. So you immediately went to that person and you came and said, "Dey, when I asked you for money, you did not have money. Ana, you have money to give on your girlfriend. What is wrong, Rahul? He said, no, Rahul, actually for this money also, I borrowed from someone else. At that point of time, you realized that this person will never pay. You have made a mind that the person will never pay. Do you think you will drag this person to the court and come and say, sir, this person is taking money from everyone, but he's not paying the money. He's a bankrupt person. Will you drag this person to the court? No, because understand, the person's nature itself might be to take loan from others and cheat them. Okay, but at the end of the day, he may already have money in his bank account. Tomorrow, if you actually check his bank account, you'll find money is there. But he is not ready to pay you. Because he likes that. Some people like to live on someone else's money. Okay, in that scenario, for you it's a loss, yes or no? It's a loss for you. Yes, but just because the other person is not declaring bankruptcy, do you think you can be penalized? There can be a genuine scenario where I went and asked money for him. That person said, I will not pay you the money because there is a dispute between us. Possible, not possible? Yes. Now there is a dispute between us, which means it is a loss. Adhikaga, should I declare that person as bankrupt? Not required. Yes. That person will come and say, boss, I am not bankrupt. I am just not ready to pay you the money because there is a dispute between us. Idhikaga, can assessing officer come and say it will not be permanent disallowance? Obviously, has to allow it to me. Yes or no? Now, if you come and ask me, Rahul, if like this, everyone will start writing off. Yes, they will start writing off. But understand, the moment the money comes back to you, you will again have to offer it to tax. Yes or no? It's not like you can take the money and go elsewhere. You will have to offer it to tax. So which means right now you are offering it to as deduction. In the future, you may offer it as tax. Yes or no? So is there any loophole? Ideally, no. It's just a timing concept. Today I am claiming it. Tomorrow, if I get back the money, I will write it off. Understand, just because someone wants to avoid taxes, 30% taxes, they will not come and say, people stop paying me 100% money. You may save 30% taxes, but you will lose 100% of the money. Yes or no? Will you like to avoid 70% of the money? No. No one in the market will come and say, for saving taxes, I'll start incurring losses. Yes or no? That comedy will come in the market, How to save income tax, Rahul? Stop income itself. Does it make sense? Will you start becoming poor just because you don't want to pay income tax? Understand, you don't make your decisions in life basis income tax. You make your decisions in life keeping income tax in mind. There is a difference. People will not start writing off bad debts in the wake that they will not get the money. They will want their money back. At the end of the day, the savings will only be 30%, but there will be a loss of 70%. That is more important to me. That is more important to me. Yes or no? Yes or no? What happened is this issue went to the courts. This issue went to the courts and they came and said, dear court, please understand, I have tried. That person is not giving me the money. That person is not giving me the money. I have tried my level best. Don't come and penalize me. Don't come and penalize me. I cannot keep following up with him. I have made a decision that I will never get the money. For me, it is a write-off. I promise you that in the future, when he gives me the money, I will take it as an income. I will take it as an income. Court said, yes, boss, allowed. Yes, sir. Allowed, no problem. Allowed, no problem. Supreme Court passed a decision coming and saying it is not required for the assessee to prove that the debt is bad. It is not required for the assessee to prove that the debt is bad. It is enough that he writes it off from the books. It is enough that he writes it off from the books. The moment he has written it from the books, he has made a decision that it is bad for him. That is enough. That is enough. For him, he has made a decision that is good enough to go. That is good enough to go. Don't come and ask him unnecessary reasons. Don't come and ask him unnecessary reasons. This was a decision by Supreme Court. Later on, what happened? Even income tax came and said, yes, I agree. Yes, I agree. So income tax passed a circular. Income tax passed a circular. In that circular, they came and clarified that if you have written off it as debt, if you written off the debt, it is assumed as bad debt. It is assumed as bad debt. I don't want to come and ask you for proof. I don't want to come and ask you for proof. Clear? Clear? Yes, this is what the circular says. This is what the circular says. Read the circular. It says, actual bad debts are allowed as a deduction subject to the following conditions. The debts should have been offered as income in any previous year. In any previous year. Example, bad debts relating to sales are allowed as deduction, but bad debts relating to loans and advances are not allowed as deductions, except for loans of business, because they will be offered to tax. They will be offered to tax, but understand, it is only here. You can still claim it under 37. You can still claim it under 37. Then I am saying it is not required to prove that the debt is actually irrecoverable. Debt can be granted as long as the debt is written off from the books. Circular number 12. Hey, this circular is beneficial to us, not beneficial to us? Beneficial to us. Will you follow, not follow? Follow. You will follow. Clear, not clear? Clear? Yes. Now, same example. Same example. Notice this example. Notice this example. What has happened? I have offered to income 1 lakh. I have asked of debt 1 lakh. I have asked for debt 1 lakh. Income tax is also allowed it. Income tax is also allowed it. In the future, I went back to that person. In the future, I went back to that person and I came and said, boss, if you want to continue doing business with me, you first pay me this 1 lakh, then only I will do business. Until you pay me this 1 lakh, no business. Until you pay me this 1 lakh, no business. Now that person said, no, Rahul, you are my good vendor. If I don't do business with you, I will lose. So I will give you this 1 lakh. I will give you this 1 lakh. What happened is the person gave back the 1 lakh. What entry will you pass in your books? Bank account debit to bad debts recovered. How much? 1 lakh. Yes. Now, bank account is a balance sheet entry, but bad debts recovered is a P&L entry. Question which then comes is, Rahul, bad debts recovered, should I have to offer it to tax? Obviously, yes. Why, Rahul? Because you have claimed the bad debts as a deduction. You have claimed the bad debts as a deduction. If you have claimed the bad debts as a deduction, bad debts recovered have to be offered to tax. Yes or no? Yes. Now, the question which then came up is, Rahul, what has happened is, I was working in the business. Every person was not paying money. Everyone is showing bad debts. Company went into losses. I decided to shut down the company. When I say company, sole proprietorship. I have a sole proprietorship. I was doing bad debts, loss making. So business shut down. 3 years later, suddenly what happened is the person came back and he said, sir, Rahul, I want you to restart your business. I said, no, I can't do that because you people have not paid me money of earlier. I said, you do one thing, you first pay me the money, then only I'll start business. Those people came back to you and they paid you the money. That day, do you have business? Don't have business. Do you have business? Don't have business. You don't have business. Rahul, can I avoid taxes? Can I come and say I don't have a business, so therefore I will not pay tax on that income? Can I say that? No. Income tax comes and says, if at all bad debts are recovered by you, whether you recover it today or you recover it tomorrow or you recover it even after the business is closed, it is taxable. Even if the business is not alive, it doesn't matter, it is still taxable. Now the question is, Rahul, you're telling me it is taxable. You're telling me it is taxable. Under what head is it taxable? Is it taxable under PGBP or IFOS? It is taxable under PGBP. It is taxable under PGBP. Income tax comes and says, please understand, this income was pertaining to the year in which you had PGBP. Okay, it is not important that today you should have business. It is enough that you had a business back then. So today also it will be PGBP. Today also it will be PGBP. So provisions come and say, if at all you have taken a bad debt in the past, the money for which you have received right now, it has to be offered to tax by you, even if you don't have the business. Even if you don't have the business. Clear, not clear? Clear. Now the example is like this. Rahul, what happened is, I had a business. In that business I incurred bad debts. Now what happened is, this bad debts business I gave off to someone else. Now someone else is handling my business. For example, Rahul was handling the business first. Next he gave it to Ritanya. So now Ritanya is the owner of the business. The money has come back. What has happened? The money has come back. Now this money which has come back will be taxable in the hands of Rahul or will be taxable in the hands of Ritanya? Will the money be taxable in the hands of Rahul or will it be taxable in the hands of Ritanya, because Ritanya is doing the business right now? It will be taxable in the hands of Rahul. It will be taxable in the hands of Rahul. It will not be taxable in the hands of Ritanya. Please understand, the bad debts was claimed by Rahul. So Rahul has to offer the tax. Ritanya cannot be held liable for it. Even if Ritanya gets the money, Ritanya will have to send back the money to Rahul. Because it is Rahul's money. It was the money which Rahul earned when he was doing business. Ritanya has no control over the money. Okay, so Ritanya will have to give this money back to Rahul. If Ritanya does not give back the money, in that case it will be assumed as Ritanya got a gift from Rahul. So that will become taxable in the hands of Ritanya also. But it will continue to be taxable in the hands of Rahul. Okay, because for Rahul has given this money. So Rahul will be taxable for it. Ritanya will not be taxable because it is not her business that time. She does not have to pay tax, but Rahul will have to pay tax. Ritanya, is that clear? Does it make sense to you? Yeah, awesome. Okay, great. Now same example, I'm continuing the example. What happened is, I did an entry called debtor to sales. How much? 1 lakh. I got a bad debts to debtors, 1 lakh. Now what happened is, when I was doing this bad debts to debtors, I passed an entry for 1 lakh. For some reason, assessing officer said, no Rahul, I know you have claimed for 1 lakh. But I cannot give you 1 lakh. I will give you only 80,000. How much will I give you? I'll give you only 80,000. There can be various reasons. 1 lakh could be from multiple parties. One party could be genuinely your party. Your related party, or because ICDS is coming and saying it. What is saying it? ICDS means income computation and disclosure standards. Next chapter we'll do ICDS. So ICDS is coming and saying, you should not claim 1 lakh. You should have only claimed 80,000. Yes or no? Now what has happened is, assessing officer has said, I will only allow 80,000. You also fed up. You did not file an appeal and everything. You said, okay sir, whatever you say is final. You agreed to it. Now next year what happened is, when you got the recovery, you got a recovery of 60,000. How much did you get? 60,000. Now in your books of accounts, you passed an entry for 60,000. Why did you pass for 60,000? Because obviously you passed your books 1 lakh. But assessing officer only allowed 80,000. Now question to you. In the current year, does Rahul have to offer 60,000 to tax? Does Rahul have to offer 60,000 to tax? Does Rahul have to offer 60,000 to tax? Sorry, ma?
So can you repeat the question?
Yeah. So the question is, you have made a sales of 1 lakh. You tried to claim a bad debt of 1 lakh. but assessing officer during assessment only allowed 80,000. So he disallowed 20,000 for you because of ICDS. Because of ICDS, today you got a recovery of the bad debts. Today you got a recovery of the bad debts. You were able to recover only 60,000. You were able to recover only 60,000. In the current year, you will offer to tax. Will you offer to tax 60,000? Will you offer to tax 60,000? Yes or no? You will not offer 60,000. Rahul, why will I not offer 60,000? Understand, 60,000 is your income. I do agree. 60,000 is your income. But understand, in the past, I wanted to claim a deduction of 1 lakh. Assessing officer gave only 80,000, which means technically in the past itself, I've already offered to income 20,000. Yes or no? Yes or no? I wanted to claim 1 lakh. Assessing officer only allowed 60,000, which means in the past, assessing officer only allowed 80,000. So which means in the past, I've already offered to income 20,000. If I've already offered to income 20,000 earlier, will I again offer 60,000 fully? No, I will come and say, sir, I will let you give 60,000. But the problem is you already took 20,000 from me earlier. So today I will not give you 60,000. I will only give you 40,000. I will only give you 40,000. Rahul, how to understand this logic? Very simply. Let's do one thing. We'll prepare accounts books and tax books. We'll prepare accounts books and tax books. On the left, I'm saying accounts books. On the right, I'm saying tax books. Yes, let's follow the entries. In accounts, what did you do? In accounts, you said I will pass an entry for debtor to sales. Entry is 1 lakh. In tax, I will pass an entry called debtor to sales. Yes or no? Entry is 1 lakh. Yes. Now I am saying I wanted to write off bad debt. I wrote off full 1 lakh in accounts. 1 lakh. Entry is bad debts to debtors. Entry number is 1 lakh. Now in income tax also I wanted to claim 1 lakh, but assessing officer only allowed 80,000. So I passed an entry for only 80,000. So it is bad debts to debtors. How much? 80,000. Yes. Now hold. Let's prepare a balance sheet. Balance sheet will say what? Debtors will show 0. In accounts, debtors will show 0. In tax, debtors will show 20,000. Yes or no? Now today you have received money. How much have you received? 60,000. Yes. In accounts, do you have a debtor? No. So which means what entry will you pass? You'll pass an entry called bank account debit to bad debts recovered. How much? 60,000. Yes or no? You'll pass an entry for bad debts to debtors bank account to bad debts recovered account 60,000. Now come to income tax. You have received the same 60,000. Do you have a debtor? Not have a debtor? You have a debtor. So will you first knock off debtor or will you directly put everything to P&L? You will first knock off debtor. Yes. So you will pass an entry called bank account debit. How much? 60,000. Bank account debit 60,000 to debtor. How much? 20,000. Then to bad debts recovered. How much? 40,000. Yes or no? In simple words, when it comes to income tax, you will only offer to tax 40, whereas in accounts you would have offered 60. Now for you, income tax, the starting point is accounts. So what you will say, sir, I have claimed 60,000 in my P&L, but I will only want to offer 40,000. So therefore I will claim 20,000. Yes or no? Yes. Simple journal entries. The provisions are coming and saying if bad debts were disallowed in the past by the assessing officer owing to ICDS or any other provisions, you can reduce that bad debts. You can reduce the disallowance when you receive the bad debts recovered, since it is already offered to tax in the past. Simple journal entries. Let me know if you didn't understand. Ilana, we'll go forward. Shall we go forward? Yes. I wanted to note down the example in your book also in case you have space. Take out a post-it. Write an example. In the recovery of bad debt circle, அது பக்கத்துல. next to the recovery of bad debts, write out an example. What is the example? Example, bad debts claimed. Bad debts claimed is 1 lakh. I think it's already there somewhere. Yeah. I think the example is bad debts claimed. No, it's not there. It's not there. Example is bad debts claimed 1 lakh. Bad debts allowed by AO. Bad debts allowed by AO 80,000. Bad debts claimed is 1 lakh. Bad debts allowed by AO is 80,000. Yes. Bad debts recovered is 60,000. Bad debts recovered is 60,000. Therefore, bad debts recovered to be offered to tax. Bad debts recovered to be offered to tax is equal to 60,000 minus 20,000 within bracket amount disallowed earlier. That is 40,000. Please put it in a post-it and stick it to your book. Ritanya, you have your post-its, right? No worries. Just make sure that you have a note. Tomorrow, don't read multiple books for exam purposes. It become a complicated part. Just make sure that the day before exam, you only have one material for you to read. Okay, that becomes easier for you. If you have multiple books to refer, no, it becomes a complicated part. Okay, so anything important which you note down, make sure that you note down in the same book itself, so that tomorrow you have a clear-cut idea. You read this book alone, it's enough for exams. Don't carry multiple books for exam. Okay. Yes. Done with it? Can we go forward? Yes. This is also one of the adjustments which keeps coming in your compulsory questions. Okay, so keep in mind. Polama. Okay. Next. This was your bad debts. We have done all this theory. Moving to the next heading called as provision for bad debts. What do you mean by provision for bad debts, ma? What do you mean by provision for bad debts? You have not received a confirmation that it will be a bad debt. But basis the credit analysis of the person, you have estimated that it will become a bad debt. That is called as a provision. So it's a pure estimate. Now, income tax is not a fan of estimates. Income tax comes and says, if you start creating provisions and all, you will start inflating expenses. So income tax generally does not allow you provisions. So therefore, income tax comes and says provision for bad debts are generally not allowed as a reduction. So which means in your books of accounts, if you have passed an entry called provision for bad debts, it will be disallowed. That is what the rule is. Yes. However, income tax says I will permit bad debts provision. Only for two people. Both the people are banking people. So the provisions are, I will only permit this provision for bad debts for Indian banks, cooperative banks, foreign banks, public financial institutions, state financial corporation or state industrial investment corporation. Yes, any person other than this cannot claim provision for bad debts. It will be disallowed. Income tax comes and says that if you want to create a provision for bad debts, ask yourself, are you an Indian company or are you any other person? Are you an Indian bank or are you any other person? If you tell me that, Rahul, I am an Indian bank. Income tax says I will permit you a provision deduction of 8.5% of your gross total income. Of what? Gross total income. Keep this in mind. It is not Pgbp. It is gross total income, which means you need to take your Pgbp, IFOS, capital gains, add everything before you claim chapter 6A. Whatever your gross total income shows, on that 8.5%, which means provision for bad debts will actually be done after the gross total income is done. Okay, so what you will do is, if you have any provision for bad debts in your P&L, you will disallow the provision for bad debts, compute your whole gross total income, find 8.5% of that. If that 8.5% is higher than your provision, you will allow the provision. If it is less than your provision, you will only restrict it to this provision. You will restrict it to this provision. Appadina eppadi Rahul? Let's say for example your net profit is 1 lakh. How much is the net profit? 1 lakh. Now this net profit is 1 lakh because you had claimed a bad debt provision of 50,000. Because you had claimed a bad debt provision of 50,000, income tax will say, boss, first of all disallow this. First of all disallow this. So your income will become 1,50,000 in Pgbp. How much will it become? 1,50,000 in Pgbp. Assuming you have another IFOS income. Assuming you have another IFOS income, let's say another 1 lakh. Your GTI is now 2,50,000. Your GTI is 2,50,000. This GTI of 2,50,000, you can allow 8.5%. 8.5% number is 1,70,000. Illa 17,000. 17,000 நினைக்கிறேன். Number சொல்லு. 21,250. So income tax is saying that, boss, you can only claim 21,250. You tried to claim 50. You tried to claim 50. Anyway, I have disallowed the 50. Anyway, I have disallowed the 50. So now you can only claim 21,250. You can only claim 21,250, and the number will become 2 lakh. 28,750. 2,28,750. Yes or no? Yes, this is what the provision is. This is what the provision is. Provision comes and says that if at all you have any kind of bad debts provision which you want to create for an Indian company or a foreign company, in that case, Indian company, you can claim 8.5% of your GTI before claiming this deduction. Before claiming this deduction. So you disallow this deduction, compute your GTI, find the deduction, then lower of the two. Then lower of the two. This is what the provision says. This is what the provision says. But yes, they have also given you an additional. They have also given you an additional. If they are saying that if you have made an advance by a rural bank, if you have made an advance by a rural bank, you can additionally claim another 10%. You can additionally claim another 10%. So it is not just 8.5%, it is 8.5% of GTI plus 10% of the aggregate advance made by rural branches. Why are they giving additional? Because they know they are giving it in rural places. In rural places, chances of you having losses is higher or lower? When you give loan and all to farmers, you will get the money faster, you will get the money slower. So chances of risk is higher, lower? Higher. So therefore you have to give more provision, less provision. More provision. So they give an additional 10% of the advances which is given by a rural branch. Only rural branches. Rahul, no. I am not an Indian bank. I am not an Indian bank. I am a foreign bank, or I am a NBFC, financial institutions and all those things. I am not a bank per se. I am not a bank per se. I will get 5% of the GTI. How much will I get? 5% of the GTI. So if at all I am a bank, then it is 8.5% of GTI. If I am not a bank, it is 5% of the GTI. It is 5% of the GTI. Yes or no? Yes or no? Now the provisions come and say any bad debts shall first be set off against the provision for bad debts. Any excess can be claimed as a deduction. Any excess can be claimed as a deduction. You have done it in accounts also, no? When you have a provision, first what will you do? Bad debts vanda, you will knock it off against provision. Balance alone you will claim as a deduction. Yes, same logic. They're saying, Rahul, my opening balance is 1 lakh. My current year provision, which I created after 8.5%, after 8.5% is 98,000. Therefore, my total provision becomes 1,98,000. How much? 1,98,000. Current year, I am planning to incur a bad debt of 2,10,000. It is final. It is final. I have incurred a bad debt of 2,10,000. Income tax will say, boss, hold. Anyway, you have got a deduction of 1,98,000 in the past. Anyway, you have got a deduction of 1,98,000 in the past. You first take that. You first take that and adjust it against that first. Because don't claim an extra expense when you already have a provision. Don't claim an extra expense when you already have a provision. So first knock it off against that. How much is the knock off? 2,10,000 is what I created as a bad debt. My provision is 1,98,000. So I will knock off full 1,98,000. I'll knock off full 1,98,000. Over and above that, my loss is 12,000. Over and above that, my loss is 12,000. So I will come and say, Rahul, 12,000 is my loss of the current year. 12,000 is my loss of the current year. So 12,000 I will claim as a deduction. 12,000 I will claim as a deduction, which means current year I will claim 98,000 of the provision which I created plus 12,000 of loss which I have incurred, plus 12,000 of loss which I have incurred, arriving at 1,10,000. arriving at 1,10,000. Why is it not showing 2,10,000, Rahul? Because this 1,10,000 is pertaining to current year. The balance 1 lakh is pertaining to earlier years. The balance 1 lakh you are pertaining to earlier years. You've anyway claimed it in the past, so you cannot claim it right now. Okay, same ulta logic ma. Bad debts recovered logic pannola. Bad debts record what we told. Since you have offered to tax earlier, I will not offer to tax right now. Here I am saying since you have claimed earlier, you cannot claim right now. You cannot claim right now. Simple accounts logics. Simple accounts logics. Yes or no? Yes or no? See if it makes sense. See if it makes sense. Can we go forward?
Also for those banks which is
Only for banks. Only for banks. You can only do this for banks.
other than bank receipts, the bank tax fee and
Provision gets fully disallowed. Exactly. For any person other than a bank, a provision gets fully disallowed and the bank debts gets actually allowed. That's what I told. No, income tax is not a fan of estimates. You tell that income tax that this is an estimate done, they'll say it is disallowed. Allow it in the year when you actually get the final number. All right. Yes. Leaves us with the last topic. Leaves us with the last topic called as other deductions. Now, if you notice my material, I think I told you in the last class also. I have jumbled everything. 3617A, 41.4, then 3617 is coming, then it is 3615A. Yes, what I have done is items which were very important. Items which are very important, I put a separate item for it. Items which are not important. But given by Income Tax Act, I put it in other deductions. Technically, the items which we discussed are also 36 only. But if I put it in this table format, you may not find it significant. So the items which I found significant, I put in a separate box. Balance I'm putting here. These are the other deductions given by income tax under 36. Not very relevant from exam perspective, but let's read and see. See if it makes sense. First item, they say any insurance premium which is paid for insuring stock or spares from risk, damage or destruction. Hey, you have a stock, you have to get insurance. Is it for the business? Not for the business. It is for the business. Allowed? Not allowed. That's what they're clarifying. Okay, so any kind of insurance premium you have taken for insuring stocks, any kind of insurance premium you have taken for Federal Milk Cooperative Society on the life of cattle. For a milk cooperative society, the major income is coming from the cattle, so they are insuring cattle. Is that allowed? Not allowed. Allowed. Then any kind of insurance premium for which you have taken the health insurance on the employees. When you have taken an health insurance on employees, is it for personal purpose or business purpose? Allowed? Not allowed. So any kind of insurance premium taken for health insurance of an employee, if paid otherwise than by cash. Rahul, how do you link this? In inter syllabus, you would have learned a section called as 80D. 80D talks about medical insurance. There also it comes and says if you are planning to get a deduction of medical insurance, payment should happen only by other than cash. Except for preventive health checkup. Preventive health checkup you can do by cash. Anyone else other than cash only allowed. Same logic. If you pay other than by cash, you will get it allowed. If you paid by cash, not allowed. Yes or no? Yes. So you can, for reference point, you can come and say refer 80D. Come and refer 80D. In simple words, you should allow it only if it is by other than cash. Clear? Can we go forward? Yes. Next is saying bonus or commission paid to employees. Simple. Bonus or commission paid to employees. I am planning to pay any kind of bonus or commission to employees. If you do it, you have to do it by 43B. Discussion of 43B next class. There is an amendment in it. Yes. Next, any kind of deduction which you are taking on an animal which has died or permanently become unstable. So you had purchased the animal past. You have purchased an animal in the past. Animal when you purchased, after that the animal has now become unusable. What deduction you will claim, Rahul? The deduction after you sell the asset. Yes, you bought the cow for 1 lakh. You sold the cow for 80,000. Loss for you is 20,000. I told you, generally when you have an asset, you cannot claim losses. It will be called as terminal deduction. Yes or no? Will be called as terminal deduction. That is what they're saying. Yes, if you have had an asset like a cow or an animal, whatever is the cost which you incurred minus the sale value will become your loss. That loss you can claim as a deduction because it is terminal deduction. It is a terminal deduction. Not relevant, not relevant. Forget it off. Next, I'm saying any amount to transfer to a special reserve by a bank or a financial corporation which is engaged in providing long-term finances for housing, agricultural development and infrastructure facility. Okay, now understand this is a very specific deduction. It's a very specific deduction given only to bank, financial corporation engaged in long-term finances for housing, agricultural development and infrastructure facility. They're saying if you create a special reserve, whatever money you put in the special reserve will be allowed as a deduction. Something similar we read somewhere. Ma. When you put some money in a development account or a reserve account, you will get the deduction. Where did we learn? We learned it in tea, coffee, rubber and site restoration. Yes, same logic. They're coming and saying that Rahul, you will get a deduction of 20% of the profits. 20% of the profits. The same thing we did in site restoration. Yes, so they said 20% of the profits or the actual amount which you deposit, whichever is lower. Then they are coming and saying, Rahul, you can deposit, but the maximum deposit in the fund overall should not go more than twice the share capital plus general reserve. Let's say, for example, Rahul, my share capital is showing 1 lakh. My general reserve is showing 3 lakhs. My total is 4 lakhs. I can in this reserve keep 8 lakhs. Maximum 8 lakhs. Rahul, till last year, I already put in this reserve 7.5 lakhs. Current year, I am planning to put 1 lakh. Which is within the 20% limit. Can I put 1 lakh, Rahul? No. Income tax will say, boss, the moment you put 1 lakh, it will become 8.5. You can only put up to maximum of 8. So current year, I will only allow you 50,000. So which means current year deduction will become 50,000. Rahul, current year deduction is 50,000. Next year, how much can I claim? Next year will become 0. Why, Rahul, next year will become 0? Because next year will become 0 because my overall limit is closed. I could maximum only deposit 8 lakhs. I have already deposited 8 lakhs. So therefore, nothing can be deposited. Unless and until you withdraw money from the reserve, you cannot get any more deductions. Which is why on the bottom you will see it says any amount which is withdrawn from some special reserve. Will be deemed to be the profit in the year of withdrawal. So they will come and say, boss, don't do this monkey business. Withdraw money, then put money, withdraw money, put money. Not allowed. If you are withdrawing money, use it for the specific purpose. If you are withdrawing money, use it for the specific purpose. If you don't use it for the specific purpose, the year in which you withdraw the money, it will become taxable. So simple logic, I'm coming and saying actual deposit or 20%, whichever is lower, subject to a maximum of twice the share capital plus general reserves in the overall fund. Yes or no? Yes. Can we go forward? Next. Any kind of revenue expenses which is incurred by corporation or body corporate constituted under a central, state or provisional act. I don't have to put this separately. Revenue expense indale allowable. Separately they have just clarified. Yes. Next. Any kind of amount which is paid by PFI. PFI is public financial institution. Any kind of amount which is paid by public financial institution for contribution to notified guarantee fund trust. I have notified a fund, in that I put money, so therefore I am allowing it. Rahul, do I have to remember all this for exam? Not required. It is okay. Understand, I have a very simple rule. Generally doesn't work, but I'm just saying a very simple rule. In exam, if you find weird names coming, like notified credit guarantee fund, do you understand what it is? No. If you find a weird name coming, look at what is happening. If you are depositing money, it's a donation. Therefore, donation la chapter 6 allowed. If you are withdrawing money from it, then it is income. Income will be exempt from tax. In simple words, Rahul, look at what is happening. If you are donating money, donation. If you are withdrawing money, exempt. If you are doing any kind of investment, capital gains exemption, capital gains exemption. That is how you remember. That is how you remember. Don't burden yourself with too much facts. Don't burden yourself with too much facts. PFI, SFI, ICIC, too many names and all is not required. Okay. If you find a weird name, income tax will have notified that weird name only because it wants to give an exemption. Okay. ICI will never use a weird name out of the books. Never. ICI will never use a weird name out of the books. Just because a name is given here, but the name is not relevant. ICI found a new name in the market, they put the name to you, will not happen. Will not happen. They will generally use the names which is here. And if the name is here, it is because income tax has notified it as exempt. Income tax has notified it as exempt. So in exam standard rule, if you have read the book properly, whatever item you don't know will either be an investment or will be an exempt. Simple logic. Clear? Notice, no? Any amount paid by PFI for contribution to notified, it's an expense, therefore allowed. Therefore allowed. Clear? Yes. Don't remember too many things. Don't remember too many things. Next. Any kind of STT or CTT paid on commodities, securities held as stock in trade. Hey, I am in the business of selling and buying shares. In that case, I am paying STT. Business purpose, not business purpose. Business purpose. Allowed, not allowed? Allowed. Next. Any kind of expenditure incurred by cooperative society for the purchase of sugar canes at the price lesser than the price approved by government. Lesser than the price approved by government. Yes, I am going to incur some expenditure. Government has fixed a price. Government has fixed a price. I am going to buy it for lesser than that. I'm going to buy it for lesser than that. It's an expense for me, yes or no? It's a loss for me. So they are explicitly allowing the loss. They're explicitly allowing the loss. Last item is mark to market losses or other expected losses to the extent allowable under ICDS. The extent allowable under ICDS. Did you understand this? Did you understand this? No, because it is saying as per ICDS. So what we'll do? We'll ignore this right now. We will go back and discuss in ICDS. We'll go back and discuss in ICDS. Right now, not relevant. Right now, not relevant. Now, read this whole deductions. Read this whole deductions. Tell me if you find anything is important. Tell me if you find anything is important or everything is understood. Even if this was not given, you could have still solved the answer. Tell me, is there any deduction which is very important to you for exam purposes, or do you think every deduction which they have given is logical enough for you to answer yourself? Looks logical to answer yourself. Do you want to read this? Do you want to read this? Ignore it off. Which one, ma? So what has happened, no, Ritanya, is that cooperative societies were generally required to sell it at a certain price, okay, because they want to live their livelihood. They want to live their livelihood. But what happened is government came in picture and government came and said, boss, I am deciding a maximum ceiling limit. I'm deciding a maximum ceiling limit because I don't want black and the loitering, what do you say, black marketing. I don't want black marketing. You do not want to hoard money. Okay. So they did not want to increase the price substantially. They did not want to increase the price substantially. So what government did is government finalized one price. Government finalized one price. They said 100 rupees. Idik mala you should not sell. Idik mala you should not sell. So what happened is they came and said, boss, if the cooperative society is deciding to sell lower than that money also, will it help the country? Not help the country. It will help the country. So they said, boss, if you are going to plan to sell it lesser than what government is saying, the difference will become a loss for you. The difference will become a loss for you. You can claim it as a deduction. You can claim it as a deduction. Okay. This is simply me clarifying that government has fixed a price. You should not sell it more than that. If you want to sell it lower than that, go ahead, no problem, because you are now doing benefit for the society. In that case, if you try to incur losses, you are trying to do it because you want to benefit the society, you are permitted as a deduction. At the end of the day, it's a genuine business expense. Correct, ma. That's what I'm saying. So government has told a price. Okay. Someone else will sell it. No. Someone else will sell it and you will buy it. Correct. So when someone else is selling it, for him you are going to buy. So for him it will be an expense. Right? Yes. In simple words, Rahul, I don't want you to read this section. I don't want you to read the section. There is a reason why I put it in a separate table is because I know this is not important. Okay. So items which were important, I've already put on the top. That if you read from Pgbp perspective, that is enough. That is enough. These things are not relevant from exam perspective. Don't put your head against it. Don't put your head against it. Let's lower down the topic, because if you notice my book right now itself, it is 500 pages. Okay, but I want to make this 500 also into 300 for you, for which these items are not important. These items are not important. Don't sit and mug up the whole book. You may not be able to write your exam properly because there are too much to remember. There are too much to remember. To the extent we can lower down the provision, let's lower down the provisions. Yes. Yes, so not very relevant from exam. At the end of the day, don't strike off also. Okay, don't just completely strike it off. Don't scribble in my book also. Okay, you will need this book after you qualify also. People will keep asking you questions after you qualify, so please have the book in hand. Please have the book in hand. Yes or no? Yes or no? Can we move to the last topic for the day? Yes. To complete this deductions, are we moving in the last topic called as residuaries? Where are we moving to? We're moving to residuaries. Yes or no? Now, I'm going to prepare a draft P&L. As per you, you are going to incorporate a CA form, assuming you're entering practice. As per you, you're going to incorporate a draft CA. You're going to incorporate a CA form. Tell me, as a CA firm, what kind of expenses will you normally have? As a CA firm, what kind of expenses will you normally have? What and all do you think you need to run your CA firm? Sorry? First of all, you have to pay salary. Salary to CS. Salary to CS. Articles don't get salary, they get something called as salary to C articles. Stipend to C articles. Okay, you're getting peanuts, no? Yes. Sometimes your traveling allowance will be more than your basic salary itself. I know how nonsense happens. Yes, next.
Rent.
You would have taken a property on hire, so therefore rent charges. Next.
Then there's books, periodicals and all the.
Books ella kudukrangla firm la.
So not that books.
I know. அதுதான் சொல்றேன். அதெல்லாம் வச்சிருப்பாங்களா? சரி, ஓகே. நான் பார்த்தது இல்லை. Anyway. Yes. Stationery cost. Next. What else can you incur? That's all. If you incur this much, you can run your business.
Sir,
other?
The utilities are
like?
Telephone.
Acha. Telephone charges. Okay. Internet charges. Then electricity. Internet, electricity. Next.
Then they'll also have this repairs and all. Computers repair.
Articles got frustrated, throw the laptop. So therefore repairs. Next. What else? If articles are going to throw your laptop, you should first have a laptop. So laptop will get depreciation. Expense, no. I never asked you non-cash expenses. I told you expenses. Depreciation. Next. What else? What and all do you think you have incurred in your CA articleship? I just told you one example. More than salary, you get traveling allowance. For you, it is an allowance. For the company, it is expense. Hey, at the end of the day, it's going to be recovered. That's a different story, but I will put it on right side also. So forget it off. For me, it's a left side expense and a right side expense. So CA firms Puerto Rico, it is cost zero, but I will show it separately. Next. What else? That's all. Chaitanya, today is your last day for season?
Yes, sir. Yesterday night it was
finished, huh?
Almost. For my clients, we have finished, but still.
If you tell it is finished, no, today you'll get 2 more clients. Don't do that. Okay. Question to you, Ritanya. Every year when the season gets over, will the company just like that leave it off, or will they take you to a party or something like that? Season relief.
Give some special dinner.
So you will have incur some staff welfare. Yes, think, no. If you open a CA firm, what and all will you do? Or tell me what are the items which you are not getting in your firm, but you want others to get. Some expectations you'll have, no? My principal is not doing me this, my principal is not doing me that, I should have got this, I should have got that. What else did you want? So you wanted one party, dinner came. Next. Diwali gift. Anuma? Yes, gifts. Yeah, next. Next. That's all. I think mota moti we have covered all the expenses. Yes, kind of covered all the expenses. To what I remember at least. That is salary. அதான் ஃபுட்டு போட்டல ஃபுட்டு போடலையே அதான் ஸ்டாஃப் வெல்ஃபேரில் வந்துச்சு கேடி எஸ் ரெஃப்ரெஷ்மெண்ட்ஸ் ஃபார் ஓவர் டைம் பே ஆல் தோஸ் திங்ஸ் தென் traveling is also covered, then gifts is also covered. Now gifts can be to articles also, gift can be to clients also, both are covered. Then there can also be a possibility that you are running a CA firm, you're running a CA firm, you will do all legal business or you might do something wrong also, might do something wrong here and there. Yes, here and there you might do something wrong. What has happened is you by mistakenly filed GST return late, you by mistakenly filed GST return late, you may incur late fee, then penalty, then interest, then yes, one of your partners in the CA firm are you didn't know one of your partners in the CA firm actually ended up doing an illegal business. Okay, so income tax office came to your home and they came and said, boss, your partner is doing illegal business, let me search you also, let me search you also. You said, no sir, I am very clean, he's only at fault, you put him in jail, but then the firm partner came and said, no, I am your friend from so many years, don't let me go to jail and all, let's go negotiate. So you also tried to say, okay sir, let's negotiate. You went and said, sir, instead of putting me in jail, I will pay compounding fee. Have you heard this word? Called compounding fee? Compounding fee is basically a payment which is done to your authorities, to reduce your offense. They will come and say, boss, I've done an offense, I know I've done an offense, I agree, but this is my first and last time, don't penalize me for this, don't put me in jail and all, I'll pay you some money, don't put me in jail. This is legal bribe. What is it? Legal bribe. Okay, we are legally bribing someone for not putting us in jail. Okay, it's called as compounding fee. Fancy words. Yes, next. Rahul, you have employees in your company. You have to give health insurance, life insurance. Yes, so you have incurred insurance charges. Possible, not possible? Possible? Yes. Now, look at the items and tell me which of the items have we already discussed. Look at the items and tell me which of the items we've already discussed. Have we discussed salaries? Where have we discussed salaries?
No, sorry.
We have discussed bonus and commission. Have we discussed salaries? No. So we have not discussed salaries. Have we discussed salary to stipend to CA articles? No. Have we discussed rent? Hey. Have we discussed rent? நாங்கள் ஆரம்பிச்சதே இந்த சாப்டர் வச்சு தான் 30 and 31 rent paid to building and plant and machinery. நோன்னு மட்டும் சொல்லிடாதீங்க. Books and periodicals, not discussed. Stationery, not discussed. Telephone, not discussed. Internet, not discussed. Repairs, discussed, not discussed. Discussed. Where? 30 and 31. Depreciation, 32. Traveling expenses, not discussed. Staff welfare, not discussed. Gifts, not discussed. Late filing fee, not discussed. Penalty, no. Interest, no. Compounding fee, no. Insurance charges, இப்போ தான் படித்தோம். 36 மேலே இருக்கு. Yes or no? Yes.
One type of interest we covered.
What, ma?
Borrowed capital for asset.
I am talking about interest on late filing, but yes, we have covered the other. I don't think, I have never seen a CA firm taking a loan, ma. Have you seen? Not required. If a CA firm is taking a loan and all, something is wrong, first of all. This is interest on late filing fee, statutory payments. Okay, a CA firm, to my understanding, at least maybe in the first year or second year, you may take a loan for running your business, but eventually, as you start getting clients, more than loan, you will start giving loans to others. Okay, you'll have enough money to give loans to others, so therefore, generally, no. Okay, now tell me, I told you that we are in the end of this chapter. We are in the end of deductions. But we have not discussed so many items. Beyond this also, can you have other expenses? 100% possible. Yes, you are in a service sector, so these may be the expenses. If you are in a manufacturing sector, expenses can be something more also. Yes, so there can be so many expenses. Do you think income tax has the time and efforts to individually identify one expense? No. Which is why it was introduced this section called as section 37. Section 37. This section 37 is like a garbage section. It's like a garbage section which comes and says, if you have not discussed about the expense in any other section, you come and talk to me. You come and talk to me, which means if you have not covered yourself in any other section, you come and talk to me. I will give you some normal rules. I will give you some normal rules. Now I'm going to ask you simple normal rules in accounts. What are the normal rules, Rahul? If you want to put something in P&L, if you want something to come to P&L, accounts, what is the rules? Accounts, what are the rules? If you want something to come into your P&L, first of all, if you want something to come to your P&L, accounts, rule number 1, obviously, first of all, it should be, now, see, I mean, if it is to come to P&L, it's not necessary to be an expense, it should be your expense. Yes or no? You cannot come and book your mother's expense in this. Yes, so it should be your expense. Next, it should be a, it should be, very good, it should be incurred in the previous year. It should be incurred in the previous year. Yes or no? You cannot come and say 10 years back I incurred an expense, today I remember it. That's not workable. Yes, it should be incurred in the previous year. Now, when you talk about incurring in the previous year, understand people are okay to follow two methods. One is called as cash method, one is called as mercantile method. We discussed, no? Yes. So, incurred in the previous year can mean two things, cash method or mercantile method. If you are in cash method, incurred in previous year means even if you have paid advance, it is incurred in the current year. Mercantile system, you will come and do actual match to match concept. You will do actual match to match concept. Depends on what method you follow, both are right. Depends on what method you follow, both are right. Next. Should be your expense, should be incurred in the previous year. Next, I am asking you a simple straightforward question. What should be come to P&L? What should come to P&L? Hey, if it has to come to P&L, it should be a revenue. Very good. It should be a revenue expense. Then very good. Should not be a personal expense. Should not be a personal expense. Yes or no? Next. You have a CA firm. I want expenses of your CA firm. I have incurred an expense to buy shares. Which I am planning to sell. Expenses which are incurred are for the shares or for the business? For the shares. Shares will be taxable under capital gains, Pgbp, IFRS. Capital gains. Is it relating to business or not relating to business? So which means it should be wholly and exclusively for the business. Yes or no? It should be wholly and exclusively for the business. Point number F. This is an extra point which I will give you. Income tax says it should not be an expense paid for an offense or violation of a law. Should not be an expense paid for an offense or violation of a law, which means if you have incurred some offense or violation for which any act is coming and asking you to pay some penalty, that will be disallowed, because income tax does not want to promote penalties. It says, boss, penalty you should have not paid because you have paid it because you have done violations. So therefore it is not permitted. So therefore they put 6 clauses. Yes. What are the 6 items, Rahul? Should be your expense, should be incurred in the previous year, should be revenue in nature, should not be personal, should be exclusively and for the business, should be not be an expense for an offense or a violation of a law. Income tax says if any expense is not covered under the other clauses, satisfy these 6 conditions, I will give you the expense. If you don't satisfy the conditions, I will delete the expense. Come to the left side. Tell me which expenses are allowed. Salary to CA. Allowed, not allowed? allowed. Satisfying all conditions. Yes, it is incurred for your business. It is incurred for your business. Next, stipend to articles. Allowed. Books and periodicals. Allowed. Stationery. Allowed. Hey Rahul, CA firm bought stationery. CA firm bought stationery. It bought some 10-15 pens and all. It bought some 10-15 pens and all. Articles saw the pens, took it and home. Took it to home. They did not bring it for office. They do not bring it to office. They stole the pens because obviously you are preparing for CA final. You are preparing for CA final, so you stole some pens from the office. That expense is allowed, not allowed. Payment was made for the business, but articles took it to their home. Articles took it to their home. Allowed, not allowed.
Sir, anyway, they have paid the food. They not know articles.
See, even though articles have took it away, it's a loss, and it's loss for the business. If you have articles have taken it away, you'll call it a stipend to articles. You'll call it a stipend to articles. Both are the same thing. It doesn't matter. It is still allowed. Just kidding around. Telephones. Allowed. Allowed. I've made personal calls from telephones. I've made personal calls from telephones. First of all, can you identify? You can't identify, therefore allowed. Next, internet charges. I was watching movie in articleship travel. Office internet, I was watching movies. Allowed, not allowed? Huh? Allowed, allowed. Traveling expenses. Allowed. Yes. Rahul, Acha, we'll come to that example. Staff welfare. Allowed. Then gifts. Now this is where you have to be careful. Gifts for what? Gifts for what is what the question is. It should not be a gift given to partners and all, because then it will become personal. It will become personal. It should be a gift given to employees, gift given to clients. All those are permitted. All those are permitted. Don't give gift to partners or their relatives. Not permitted. Next, late filing fee. Late filing fee. See, here is where the issue starts. Here is where the issue starts. I told you, these are all expenses incurred for business. They are all revenue. They are all done by the previous year. It is done in the previous year. All these are fine. But the last condition is where the violation comes. It says it should not be an expense incurred for a violation or an offense of a law. Now understand what do you mean by violation or offense. Income tax comes and says that, boss, when I talk about a violation or an offense, I am telling that it should be a payment which you are doing because Act is asking you as a discretionary scenario. Act is asking you as a discretionary scenario. Rahul, a simple question I'll ask you. Today you have not filed your return on time. You have not filed your return on time. Income tax comes and says if you don't file your return on time, interest will be levied. Is it mandatory or discretionary? Mandatory. You can come and say, sir, I made a genuine mistake, sir, return was not working, portal was not working, DSE was not working, so I did. Will they take off interest for you? No, it will still be mandatory, which means that is being levied to you whether you are a genuine person or not a genuine person. Yes or no? Rahul, I have not filed my return because I wanted to cheat government. Government will immediately levy something called as penalty. Now, that penalty is mandatory or discretionary? Is it mandatory or discretionary? It is discretionary. Yes, tomorrow if I go and tell the assessing officer, no sir, I was genuinely not able to file return because DSE was not working, will he still levy penalty? He might not levy penalty. If you say, no sir, I have actually gone and cheated the government, then he will come and say, okay, no problem, then I will levy penalty. Yes, so there you have made a payment for a discretion, which means where you have cheated the government. In that case, will penalty be allowed? No. So understand, any kind of payment which is mandatory under that, are not called as an offense payment. In fancy terms, we call them as a compensatory payment. We tell them that these payments are compensatory in nature and therefore it is allowed as a deduction. There is a court decision. Which comes and says interest, late filing fees, all these are compensatory payments which are compensatory done for violation of a law. But these are compensatory in nature and are mandatory levied whether you are doing genuine business or not genuine business. What is not allowed is a penalty case, because penalty is done because you have actually cheated the government. That is what I want to de-promote. So, late filing fee, allowed, not allowed? Allowed. Penalty, allowed, not allowed? Not allowed. Penalty is what is mandatory. So, penalty is not allowed. Rahul, interest on start payments. Allowed, not allowed? Allowed, because it is compensatory. Compounding fees, Rahul. Now, here is where the question comes. I am saying that, Rahul, I was going to be put in jail. So I did a negotiation and I came and said, sir, I am negotiating with you. Don't put me in jail. I will pay you 10 lakhs. Don't put me in jail, I will pay you 10 lakhs. Technically 10 lakhs is as good as interest or penalty. Penalty. Allowed, not allowed? Not allowed. Not allowed. Clear, not clear? Clear? Yes. Now, question to you, Rahul. Penalty. There are two kinds of penalty. There are two kinds of penalty. What has happened is, I entered into a contract with Gayatri. Where I said, Gayatri, you have to give me an asset 2 days later. You have to give me an asset 2 days later. If you do not give me the asset by 2 days, third day you have to give me a penalty of 10 lakhs. You have to give me a penalty of 10 lakhs. 2 days later, you forgot to give it to me. I told you, give me penalty of 10 lakhs. Now, you have given me a penalty of 10 lakhs. Allowed, not allowed? Allowed, not allowed? Ritanya, allowed, not allowed? It is allowed. It is allowed. Read the section properly. It says it should not be an expense paid for an offense or violation of law. The important word is law. Ask yourself a question. When Gayatri and I entered into a contract, did we violate a law or did we violate a contract? We violated a law. Technically, even though I'm using the word penalty, it is nothing but a compensation. For my delay. There, do I have to go and plead before him? Do I have to go and plead like an officer, come and say, yes sir, I genuinely made a mistake, genuinely sorry sir, I'm sorry sir, Indian laws not followed and all those things? Not required. Yes, understand, this is me de-promoting a law offense. It has nothing to do with my contract payments. So therefore, penalty which is paid under a contract is allowed, because it is not a violation of a law. Penalty paid to a statutory body because of a law is disallowed. Clear, not clear? Yes. ICI loves to play around this. They'll come and say, boss, you and I have entered into a contract. As per the contract, I'm paying you a penalty of 10 lakhs because I gave you late products. Allowed, not allowed? Allowed, because it is not an offense of a law. Clear, not clear? Clear? Yes. Now this is what is 37. 37 comes and says what? You should not have an expense covered under 30 to 36. Come and check with me. I will tell it should be incurred by you. Incurred in the previous year. Should be revenue in nature. Should be incurred for the business. Should not be an offense or a penalty. Should not be personal. Item. Yes, this is what the rules are. Since I have 5 minutes, I'm going to quickly ask you some examples. Use your head, see the conditions, tell me whether it is allowed, not allowed. Okay? Yes, examples are these. First one, I'm saying I have paid a premium by the company for a key man insurance policy. What is key man insurance? I think we discussed, right? We discussed what is key man insurance. I told you that you have an important person in the market for which you have taken an insurance in case he dies or he leaves the company. So company is paying premium for that key man insurance. Ask yourself questions. Is it incurred by the company? Yes. Is it revenue in nature? Yes. Is it incurred for the business? Yes. Is it personal? No. Is it an offense? No. Allowed, not allowed? Allowed. So therefore, first item, allowed. First item is allowed. Hey, with me till here? Can we go for Next. Benefits or perquisites to a person, acceptance of which is in a violation of law. Forget all those things. Look at the example. It says freebies which are paid by pharmaceuticals or other associates to medical practitioner. Basically, what is happening? Let's say, for example, I have created a new medicine. You are a doctor. I went to you and I came and said, dear sir, I have created this new medicine. It helps you cure your headache. Going forward, I have a small request. Going forward, if anyone comes into your clinic and comes and tells you that he has a headache, going forward, you only sell my medicines. In exchange for it, I will sell you this medicines at 20% discount. So I have given this medicines to him with a 20% discount because I want him to sell only my medicines going forward. Question to you, allowed, not allowed? Bye. What is the violation? Very good. Understand. And doctor has a moral obligation towards his patients. Yes, if a doctor is going to make a decision, doctor has to make an independent decision based on the diagnostics of the person. He should recommend the best medicine which will help the person cure. You trying to influence the doctor coming and saying you should use only this medicine is you trying to influence his decision, and that is considered as a violation under Indian Medical Association. Indian Medical Council comes and says a doctor should make his analysis independently. He should not come and get influenced of his decision based on someone else, due to which the patient's life gets into danger. Therefore, it has been clarified under that law that you should never take any free products from any person. Should not take any free products from any person. Now, I have given free products to my medical practitioner. Have I violated a law? Not violated a law. I have violated the law. Allowed? Not allowed? Not allowed. That is what the logic is. That is what the logic is. Clear? Clear? So, any freebies provided to doctors and all will be violation because you have violated the law. Yes? Can we go for next? Any kind of expenses incurred for compounding an offense. We already discussed. Compounding an offense is nothing but a penalty. Therefore, it is not allowed. Therefore, it is not allowed. Next, I am saying I am paying any commission paid to doctors by diagnostic sectors for referring patients. I am saying I am a diagnostic center. Let's say, for example, Aarti scan labs and all those things. Yes, where scan labs happen. I am going to a doctor and I'm coming and saying, dear doctor, going forward, if a patient comes to you and asks you for a full body scan, only recommend my name. Tell them that in the future, if you want to get a body scan, only get scans from Rahul Scans. For every patient which comes to me because of your name, I'll give you 10% commission. Hey, this 10% commission is legal, illegal? Is legal, illegal? Illegal. Why? Same logic. Medical practitioners should not be influenced by the decisions. They should independently come and tell which scan labs is better. They should not come and ask your name. Therefore, it is illegal. Again, not allowed. Next, CSR expenses. You know what is CSR expenses? Any kind of social responsibility payments made under a company law. First of all, is it incurred by you? Yes. Is it incurred in the previous year? Yes. Is it revenue nature? Yes. Is it personal in nature? No. Is it incurred for the business? No. Understand, CSR expenses are not incurred for the business. What benefit it is going to give you business? No, right? So therefore they said not allowed. Yes. Next, expenditure representing contribution for political parties, including advertisement in brochure, tracts, pamphlets or publications made for political parties. There is a political party friend which you have given him donation. For running his campaign. Allowed, not allowed? Not allowed. Why? Again, not for business. Yes. Next, any expenditure incurred for the development of roads or highways in build, operate or transfer bought agreement. Basically, what has happened is, I have a road. Government of India came and said, on this road, I want to create a toll gate. How will it happen is, you give me the road to me. I will build the toll gate. Who am I? Government. I am the government. Yes or no? Now, in exchange for this, what will happen is, in the future, whenever I start collecting toll money, I will give you the toll money. I'll give you the toll money for the next 10 years. Yes or no? Yes. In the opposite scenario, what is happening? When I collected this land from him, I also engaged someone for making the toll gate. Yes or no? So government came and told that person also. Do one thing, you make the toll gate here. That person said, sir, payment. Government said, no payment for you. Don't do it for free. In the future, when there is toll gates happening, for the next 10 years, you become the owner of the toll gate. Whatever toll comes is your money. That is called as build, operate and transfer. So I will build the toll gate. I will operate the toll gate. 10 years later, I will give it to government. Is there a fixed term? Not a fixed term. There is a fixed term. So if you incur an expense, will you allow it in 1 year or over the years? Provision comes and says, allow it over the life of the agreement. Okay, I told in income tax, whenever you find a definitive term, allow it over the years. Yes, last three items, it says registration fees incurred for increasing authorized share capital. Registration fees incurred for authorizing share capital. Now, incurred by you. Yes, incurred in the previous year. Incurred for the business. Not personal. Not capital. No, it is capital. It is capital. There is a Supreme Court decision which comes and says that if you have incurred any expenses for increasing your authorized share capital, this is a capital expense. This is a capital expense and therefore cannot be allowed as a deduction. So registration fees which is incurred for increasing share capital is not allowed. Last two items, interest payable under MSME Act. This I think you know. If you are going to make a payment for MSME interest, income tax has no problem. MSME Act comes and says that you will get a disallowance under income tax. So MSME Act section 23 comes and says if at all any interest payment is paid under MSME Act, that will not be allowed under Income Tax Act. So Rahul, is this given under Income Tax Act? No, it is given under MSME Act. MSME Act comes and says income tax will not allow. So therefore, any interest paid under MSME Act will be not allowed under Income Tax Act. Clear, not clear? Clear? Great. In next class, what we'll do is the last line item along with the case laws. We have some case laws here. All are fun case laws, best case laws. Okay, all fun case laws. I will give you the examples. You tell me what is right. We will do it in the next class and then move automatically to disallowances. Thereby completing the chapter for the day. Yes or no? Yes. So next class we will complete the chapter for disallowances and then move on to sums. Clear, everyone? Yes. Any doubts? Can we close for the day?